intervening. Something ran under, but still over my agreements. Something I've been feeling for before the darkness and internal demon. Close the door like it's never a good idea to run back to an ex, even if it marked the spot.
Alright, it is 4:05 Eastern. We're going to turn the music down here and get started. Thanks for joining me, guys. I normally do a trade review first before I do any like real homework. But what I want to spend most of today doing, whether or not I have any viewers watching me or not, I think it might be interesting for those who are interested in building a system that's rules based with the help of Sierra Chart. But if you only want to stick around for the trade review, that's fine with me too, of course. Whenever I get new ideas, though, about how to build how to build, let's say alpha, right, to my trading, if I want to incorporate new ideas, it's important to not only back test but also to forward test. And so the idea with forward testing is that you start out with an idea, such as when X indicator does Y, right? Then try buying, right? Like something simple like that would be just a what we'll call a concept. You'd back test that, see if that has any validity at all. And if it does, it turns out, oh look, if you just bought every single one of the times that indicator fired off, right? That like combination of settings occurred, you do okay in the past. But that doesn't tell you how you're going to perform in the future, and it does not tell you how it's going to perform in the current market environment. So when I come up with new ideas, what I generally do is I start out putting them down on paper, and then from there I try to build them into signals. And so, for instance, you can see these graphs down here are that's the level I'm at right now with most of these new ideas. Is I am optimizing basically the settings on the signals by visually watching what they're doing and trying to determine, for instance, if this hadn't indicated a bullish signal and I thought it should have, I can immediately look down and say, like, well, why didn't it happen? Now, you have to be careful that you can't just constantly optimize and change things, because that's not the same thing as you can't just say that let's find the best setting that worked perfectly today and expect that same setting will work forever. The market doesn't work like that. But what you can do is you can get like a a pretty good idea of um, what settings should be optimal in certain conditions. And so, for instance, I've got the orange background here. I'm building an indicator key. I'm not sure if you guys can see this on anywhere else unless I bring it up to my screen, but I've marked it. I think I have to. I'm gonna have to turn this on. Maybe you can see it now. Someone can let me know. But I'm pretty sure that that's how that works. But one way or another, I'm building an indicator key to help kind of explain some of this stuff. And then the other thing I have that I don't have open right now is just the logic that we could build together too of how I think it should work. But an example in pane 4 here, which is so that these are, I've got the price graph, and the indicator pane 1 is the accumulated volume. Pane 2 is the volume to bar range ratio, or the bars, and then the line underneath is actually the linear regression over, what is it? It's, hold on, let me tell you exactly what it is. It's in here somewhere, hold on. If you want to know the, there's a length associated with linear regressions. Bit-ask volume ratio. 9. Okay, so over the last 9 bars, it's the linear regression of whatever the volume to bar range ratio was over the last 9 bars. So right now it's a little bit scrunched up and it doesn't look very useful. It just looks like it's turning yellow and red. But when I don't have these new indicators on here, and eventually I won't need them because they'll all be coded like this with like background colors and stars and diamonds and stuff like that. I won't actually need to watch them anymore. But when I'm building new ideas, like I said, I like to watch them so I can forward test them. But I can make it bigger if you want. You can sort of see what normally I might look at is you can actually see like the undulation slightly of them, and then you can measure that across a certain number of bars or from one indicator to another or whatever you might want to do to make a signal, right? So that's pane. I'm calling that pane 1 and pane 2. So those have been on my chart forever. I find both of these volume related measures super helpful for making split split second decisions about whether or not I should be even in the market or not. A good example is when you have, for instance, in this situation here, let me make this bigger so there's not so much information on the chart. But with these two together, you can see that you've got one volume bar here. And we're not going to count the ones with only 2 of the same color. We need at least 3. So this would be 1 down bar. This would be 2 down bars, right? Down waves, sorry. We're going to call them like Weiss waves. And then number 3 Weiss wave would be here. Technically, you could start it here if you want, but it definitely ends here, right? And you can see that wave, this one, the peak of it, is higher than this one, but not higher than this one, right? So it's not the biggest of the last 3. Well, so therefore, you can continue to trade however you were trading before. Once this occurs, right there, see how that goes over the highest level of the previous bar, the highest bar in the previous wave, sorry. What that means is that now we're always going to look back across 3 waves. So here's wave 1, wave 2, wave 3 down, right, and it's continuing. But once we've put in a bar, right there, that goes beyond the accumulated volume of the down bars versus the previous 2 waves, right? We know we want to stop, that we're no longer looking for bidirectional movement. So we should not be buying a signal here unless you have a very aggressive reason to do so, or a very good reason to be aggressive, I should say. And an example of that would be a location far away from the previous action. If you've got a situation where, let's say, like that you want to get long down here because there's so much negative delta, that's fine, right? It's aggressive, but it's fine. But what you don't want to do is if you got this price action where you get a little bit of chop, if you got that right here, after you got all this extra volume in here, I am not personally treating this, once I see this, I'm no longer treating it like a back and forth balanced market, and I'm no longer going to be looking for these mean reversion trades like trap back in, which is when you have a power bar, which for mine is these sideways triangles, look like little flags on a flagpole, right? These ones are upside down. When you get underneath one of those and then close back inside of it, especially when there's a purple bar like this, right? That's near the bottom, near the apex of one of these, they tend to create nice trades as long as you're in a balanced market. Well, once I see this, I know I'm no longer in a balanced market on that time frame. So I can stop taking those. So like when they set up here, see how this continued to be bearish volume building all the way to here. So this is a significantly big volume build. So even though now this gave me another reason to buy, because it had this background here. So in this case, I actually can buy it, but I would not buy this one, right? Normally this on its own, the green bar that's pink on its own is pretty good, and when you have a diamond inside, it's even better. But you are fighting the trend since this volume is so high, and it doesn't mean it's not going to work. It's just not going to work as often as it did back here, right? This same exact signal back here during balance is going to be really strong, but after a big drop like this, it's not that you're not going to get a lift, but that lift will probably end right there. See that? So and again, there's a lot of people that I know that trade this system that take that trade every time and just exit, like as you approach the middle of the band here. That's fine. Like it's a great scalp, right? But know that most of the time, after like getting stuck up here somewhere, we're probably going to come back down here. So you don't want to buy here and just hold it all the way through. Now, this green background is telling me something new, which identifies this area as an area to watch, but we'll get to that in a minute. So don't worry about that. But I just want to show you how I'm using this the volume accumulation waves. It's really important to get a feel for that. You can do the exact same thing bullish. If we back up a bit, show you what that looks like. So here we had what looks like a pretty balanced market, right? And we could count back. Here's one volume bar up or wave up, right? Here's another volume bar wave up, goes a little higher. Note this one, price goes higher, but volume doesn't. So that's actually a divergent wave up, which can be fought if you have the right signal, right? And you can fight that for a scalp back down, but but in this case, because you've got the green bars, the green waves are dominant, you generally want to be looking for the bull moves to extend. You can still trade bearish, right? But you're trading within the balance area. So if you're looking for an extended trade, like a trade where you can get in and hold runners, you want to stay with the dominant side. Now right here, we had a pretty big down move, right? And so I wouldn't blame anybody for missing this and deciding like, it's a little questionable whether or not we're still balanced, so maybe I'll skip that. And I'm honestly okay with that. But then what you have to do is you have to monitor the whoops, I did not mean to do that, sorry. You have to monitor these two lines. So you have this one, right, which is the bear, and that one got taken right here. And then you have this one, which is the bull, right? And that this highest volume wave up occurred here, right? And then we had another push up. So once we beat this with accumulated green volume right here, which occurs on this pink bar, what we can then do is say, okay, we had a big wave down, and now we clearly we know this here, right? And again, it's okay if you didn't catch this. That's the best one, but if you didn't catch it, that's okay. This right here is actually a great move as long as you know you're bullish, because it's star down, speed bar up, and it's also got a lot of volume on this bar because it's got this pink diamond on it, and it's at the lows, right? So this by itself is a really good signal down here when it's at the support. See how it's like previous support tested underneath it, right? It's trying to push back, and they are building now. We can see bullish volume, right? But again, you might think, well, we had this big bear volume here. I think we're going to continue lower because we were going lower earlier. So if you thought this was going down and you didn't buy this and you didn't buy this, once you see the triangle up bar get a big volume like this that goes over the volume bar here, you have to start thinking about where am I no longer bearish, right? And the obvious place to no longer be bearish is if you took out the volume build that occurred on the way down. So this is the low here. Sorry if I'm going a little fast here, but I'm assuming this is not the first video you've watched of mine. If you're totally confused by all the colors and stuff, I will explain them if people ask. But I'm going to assume that you can just go back and watch my old videos if you're really curious. So what we can do is we can start here at the top. I draw mine like this. So that's the volume profile, and you can see that the majority of the volume was here. Now, even if you at like just under 12,300, right? Even if you don't have that tool, you can see that the volume bar ratio is highest at this bar right here. Volume to bar range ratio was highest right here. So if we can close a bar above that big volume build and get the point of control, which is the little dashes inside the bar, and they're connected by this yellow line, if we can get that above this high, then this big volume build here, these guys are all trapped. These ones at the end, the ones we care about, right? The ones that are stuck. And again, the trade and perform signal of the star at the lows is kind of like your hint. It's not a trade on its own, right? But once you get, again, at first it's a lot to look at, right? But once you get used to some of this, you'll see that there's some situations that they just don't come up that often. And when they do come up, they work really well. So for instance, a star at the top that's bullish, so a white star at the top or a yellow star at the bottom, right? They don't happen very often. Usually it's the other way around. Usually the yellow stars interact at the top of the range, of the trading range, which is identified by this band too. That's like your standard natural rotation, right? Is you'd expect it to go from this blue line to this blue line. Obviously, it doesn't always stay inside there, right? Depending on momentum. But the point is when you've got a yellow star that has a bar that was near this side of the band, or at least near resistance, like that's usually bearish. But when you get the yellow star, which is the same exact signal, right? But now it's at support. It's not bullish yet, but if you can get established above that, the opportunity is that you could actually trap that aggressive trader, because that's all the star is telling us, is that there's an aggressive trader there interacting with the market at that point. So same thing here, right? Only in the reverse. So we've got a star that should be at the bottom, right? The white indicators are bullish, and they like whether it's a diamond or a star or a triangle, I use white consistently for that reason. I'm mostly a bullish trader. I could technically make these all red and make it a little more consistent, but or all yellow. But for now, the white ones are all bullish, and so they should be at the bottom blue here, this bottom blue line like this. And when they occur here, especially on green bars or with green backgrounds like this, you can usually buy them. Like I'm not in really, really bearish markets, right? Not as like not every single time, but as long as you have somewhere to target that is achievable, and that target is around the top of this blue line, right? So in other words, if I can say, I'm looking at this and I'm trying to ask myself, getting off a little tangent, but that's okay. I'm trying to ask myself, is it reasonable to think that I should buy this when we go higher, right? Well, we had some bearish movements here, right? We have some trapped traders up here. See all these signals that went off? And then we got underneath them and rejected them and came down with the star. See that? That's the short, by the way. But once you get under all these trapped traders, now the reason why it's marked off here is because I was trading during that time, and that is your target now. If you're bullish, that's where you want to try to get back to. And so when I decide in a split second whether or not I want to be long here, even though I get these signals that say someone wants to be long here, it's in the right location for a long. It's at the voodoo range level, right at the dashed line, 12.9975. It's at the bottom blue of the band, right, what we call the fourth rail, the 1, 2, 3, 4, and then the midpoint. So it's at the fourth rail at the bottom. That is usually a good trade no matter what, as long as you're not in heavy down markets. So, and what can tell you whether or not you're in a heavy down market is, first of all, the angle of these bands. See how right now they're pretty flat? And then also we can use these indicators in the bottom to determine that, which we're going to talk about today. But here it was getting pretty bearish here. You can see that this signal didn't produce much of a rotation. It didn't even make it to the midpoint before turning. So these guys were very aggressively short. They were getting short earlier than you would expect, which is on the upper floors of this band is where you would expect the sellers to show up naturally, right? Like this. These guys showed up at the bottom, right? So they risked getting trapped trying to get into this short trade. They wanted to be short so badly, or to get out of their long so badly, that they were willing to short at the lows, right? And so when they pop up and try to test over them, we can get a lot of information about who's actually in control on higher time frames just by monitoring this level. Now notice the algo that produces these indicators, it's not thinking about where we are on the chart. That is our job as traders to decide whether or not we want to be buyers here. The algo is telling us, it's looking at the footprint and the DOM and the time in sales and things like that, and it's saying that there's an aggressive trader that's getting long here, and if you want to be long, it's a good opportunity. It's up to us to decide, do we have risk reward, and do we even have interest in that side of the market, right? Well, here, our primary target right now is, see, we've already met this, but we didn't overcome it. Until we overcome this, our primary target is actually the blue line, and our maximum target's up here, right? And so I've had some difficulty deciding whether or not I want to participate in markets like this, especially when the low of the channel here, the band, is not at the low of the rotation, right? So on like a higher time frame, and you can see it from the waves, the low of the down rotation ended right here, right? That's the low of the down rotation on a higher time frame. Like you can, if you back out, you can see it. See that, like wave up, wave down, right? Just like a regular rotation on a higher time frame. That's clearly the bottom right now. Obviously, you don't know if it's going to go lower than that after this, but that area is generally, if this is going to go higher, this area here has to hold, right? That's just like basic technical analysis. Like you need this low to hold, or you can test below it, but find buyers right below it, right? So now you have to ask, well, if I got long here, am I willing to put a stop down here? And in my opinion, I would usually say no. I usually don't want to have 30-point stops. I'd prefer to have like 15-point stops. So I would have to put my stop right here, which is what I did. But it's a hard thing to do. It's a hard thing to decide that it's okay to buy what is basically the bottom third. See this, if this is the rotation here. Oh, here, I'll show you with the measurement tool. So if this is our rotation, down to the low, which is green, you can see that the top half of it, the 50% retrace would be your natural target if you think it's still bearish, but you want to play counter trend. That already got hit, right? This was your 50% retrace. So if you're bearish, this is going to turn around and just flush, right? That's what you have to assume if you think this is bearish. And again, that depends on the higher time frame. If you're bullish, however, now that you've gotten the 50% retrace rejected, the next thing you'd expect to happen, if you're bullish, was to have to attack this 61.8%, which aligns with the Voodoo range level, right? Well, we just are bouncing off of Voodoo range level, and it's very, 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 very normal for balanced markets to go from one Voodoo range level to the next. So now, if I measure, again, this is something you just kind of have to do like almost naturally and immediately with your eyes as you plan your trade before you even see the signal. Because if you try to think about all this stuff after the signal prints, it's gonna be too late. So you have to know this before the signal prints that you're looking long, right? That's what I'm saying, but the algo doesn't help with that. It'll tell you not to get long in here, right? There's no signals in here. It's helping you not get short at the lows, right? Like I know not to take this. I also would not have taken this, and I probably don't take this either unless I really thought it was bearish. And again, I can show you why I might think that with this. And there is some signal that it might be a little bearish. But here is my potential reward. Oh, sorry, I didn't do this right. This is my potential reward, right? And so generally, scalping futures, I want to have about a 1-to-1 risk-reward ratio. As long as I stick to the signals, right? If I stick to buying stars and green absorption bars and speed bars and things where the like back tested and forward tested up and down, like these really high odds signals, they're gonna work more often than 50% of the time. I know that from personal experience, right? Like that's just been my own experience. Maybe that won't be everyone's experience. That's my experience in this time frame currently, and like that time frame changes a little bit. Like right now it's been the 24 tick. Last year we were working in the 20 tick, and the 20 tick's not working as well right now, and you really need the 24. One way or another, I can consistently backtest that this is, in the past, has been producing better than 50% of win rates, right? And the stop for this needs, can I just grab this and move it? That's what I'd like to do. I'm not, oh, I guess not. The stop for this needs to be, like I said, underneath the Voodoo range level, and whereas your entries here. So this is your risk, right? And then I can make this a different color, but let's just look at it. And you can see that's reward. Hopefully you can see it's a little bit better than 1-to-1, right? So my initial, and again, you need to do that visually just kind of in your mind before the signal even shows up. So I know this isn't the beginning of the day, but I just want to show you this is a good example of a trade that I took that it's one of the reasons why I've been watching these lines and why I think I can actually improve my win rate by doing so. So what you'll see happens here is we go right to the Voodoo range level. See that? Right to it. Right? So it turns out to be a beautiful scalp, exactly what I expected. And I get more than 1-to-1. And I am out of the trade there, by the way. I don't think that this is the low, right? Because we didn't see this level defended significantly. Yes, we got a wick into it, right? But if you look at the volume point of control, that bar, it was right on the Voodoo range level. See that? That Voodoo range level is getting defended. That's what's happening here, right? We're getting under it and they're defending it. What has not happened is they have not actually pushed back down into it. Like here they almost did. I want to see them pass back into it and defend like below it. Sometimes they do just come to it and rock it. That does happen, but usually that's after a breakout to the upside. Today was not a breakout to the upside. So that's usually what trend behavior looks like. I can show you, well, actually, honestly, it's exactly the opposite of this. So see how we went through this Voodoo range level here, 12.3, 39.25. This was bearish, right? And we went through it, right? We back off, we make a lower high and continue lower. Where do we go next? Back to test the Voodoo range level. What would be very normal would be to test behind it or right at it, but not be able to get a yellow dash on a bullish bar above that level because bears are in full control here, right? Even though this looked bullish and I bought it, right? It's important that we know that this is all we need to be profitable traders, is this little move right here. It doesn't look like a lot, right? But this is, if you got in here at 12.3, 15, 50, let's say, or 12.3, 15, 25, and you got out at 12.3, 39, 25, right? So, I mean, it's almost 15 points. Let's just call it, or it's like 14, right? almost 14 points. So like it's still a decent little move. And if you just take that with one contract, like it's worth. I don't want to get into specifics too much, but I mean you can take $2 times every point, or sorry, $20 if it's a regular contract, mini, and you're already up 200 plus on the day, right? Which for a lot of people, $200 in a day is pretty good, and that's just one contract, right? And if you get good at that, you can identify these little 12 to 14 point moves regularly. You could take it with maybe 2 contracts or 3 contracts, and all of a sudden you're making really good, what I would consider really good money if you can do that on a regular basis, right? Like I think a lot of people go to school for a long time to be able to pull in like $300 or $400 a day at a regular job, and then they work their ass off. And I work pretty hard at this too, but to be able to do that consistently, obviously some days you're going to lose, right? But if your winning days are paying you similarly to what like a full-time job would, that for most people that's a pretty good result. Some people want a lot more than that, but the point is that with just this one trade, just that little time to sort of like identify that, okay, I think it's bearish, but we should get a good counter trend trade here. My trouble is, first of all, committing to that counter trend trade, and again, that's why I'm going to show you why these helped, and then also committing to exiting here, which is, I think, a little bit harder. But you'll see what ended up happening here is we trapped this star. See how they tested above the voodoo range level? They put in a dash, but they closed it bearish, right? With speed. And you can see that buyers actually pulled their orders here, which is why it's purple. So then they tried again, way up high, right? See how it's at the midpoint of this channel? So this right here should, if you are bullish and you bought this and you held because you think it's going to go higher, and you see this show up and it's not screaming bullish, right? It doesn't look like like this. See how it's like up, pullback, right? It's not doing that. It's like at best balancing. Agreed? If it's balancing, and oops, I went too far. If it's balancing and you're seeing them try to pop stars off the midpoint like this of the channel, don't be bearish, but be what's the right word? Like, I don't want to tell you what to do, but like you need to be I'm just gonna exit. I'll just say it that way. Like, I'm just gonna exit my trade here. And it's hard because it's a bullish signal, right? We see that star, and if you've been in the trade and perform room for long enough, you get like hardwired to see that star and think, oh, it's a star buy. Well, unfortunately, it's just not that simple because it depends on high level things. And again, like, even if you bought this and stopped out, I mean, you really shouldn't be buying that, but because of the location. But even if you thought it was really bullish and you bought this and stopped out, it's not the end of the world, right? You'll still get another one of these trades in the future that's set up just like this. But if all you have to do is just filter out and say, I'm not going to take these trades that set up here, either at all, or like you could say, I'm only taking a trade if the star, if the point of control of the star is down here underneath the purple, which is a pretty good plan. Or you could say that I'll take them off the midpoint if we are in momentum. So here, I'll show you where it does work. So there was one earlier today. So even this one, I don't like. See how it starts at the midpoint? The POC is clearly above the purple, right? They try to make it go and they fail. If you put your stop under this, you get stopped out right here. And it stops you out right where you should be buying at the bottom of the channel. I actually bought this bar right here, and then it goes higher. Now I wish I would have held this, but I actually sold it here, and I need to investigate that. We're going to look at that trade in particular. I'm going to leave that marker on there because that was a big mistake, and I see why, but I need to code that in, and so I want to show you how I do that. Let me find one that does work, because I promised I would, because sometimes they do. Here's another one that doesn't work. See how it bounces off the midpoint? It can't get that POC underneath the purple. Tries to go, gets stuck at the purple on the other side, or the red, or whatever color that is. It's the same thing as the purple. It's just other side of this. So there's like, this is a half, and this is a half, and then there's quarters, right? And that one stops you out, and then puts the star where it's supposed to be and runs, right? That's what usually happens when you buy stars in the midpoints. Here's one that works to the downside. There just wasn't a lot of bullish momentum today. Oh, earlier in the day there was. Hold on. Here we go. So here's one that works, right? It gets out of the bands, right? See that? Fully out of the bands. Signal short, pulls back in, can't even get to the midpoint. Certainly can't get to the purple line, sorry. And immediately prints a star with high volume. You can't really see it, but there's a volume diamond behind that too. And they wick into it. So the buy is actually down here at the POC, and for a momentum buy. So I'm taking that rather than buy. See, some people wait for the breakout. They will say, here, I'll show you what you think. This is like retail trader thinking. So they're like, I wish I would have gotten along here, but I didn't follow my plan, right? Like you can see where I should be getting along by the green backgrounds. They're not every green background's a buy, not every red background's a sell. Like this is not a sell. It's not in the right spot. They need to be interacting with this blue line or beyond it, right? So this one is definitely buy, right? This one is very, very, very sketchy, but technically buy because it is touching the purple, but the POC is way up here, right? So this is a little bit aggressive. I would prefer a pullback into that zone to get long. And then this one, see this, you could say that that's a sell, right? And that would be unfortunate because it doesn't go very far, but then it sets up here again with momentum. So this one at the midpoint does end up working. See that? Because you had enough momentum built here. And so again, you can use these bottom indicators, like I'm going to show you in a minute, how to figure out when to do that. But normally, as we saw before, these don't work, right? Most retail traders miss this, right? And then they see this and they're like, okay, well, it's still bouncing, right? It was bearish. Maybe they short that or maybe they just wait. I think some aggressively buy this, but most don't, right? They wait for it to make the higher high, which is here at the voodoo range level, and they're like, okay. And then it pushes down, right? And they're like, okay, I know I want to get long here, which is the right idea, right? I see it's put in a low and we're making higher lows and higher highs now. So what retail traders tend to do is they say, okay, I'm just going to buy when we break out above that. And I'm not saying that's wrong, but I am saying that the problem with that is where do you put your risk, right? Are you going to put your risk down here? Are you going to put your risk down here? Are you going to put your risk down here or down here? Like that has to be figured out if you're going to buy breakouts, because sometimes this is going to pull back. Well, most people will put their risk here underneath the most recent swing low, right? They'll buy here, put the stop here. Now the problem with that for me is that you'd be getting long at, let's say you got long at 12.4, 57.50, right? Right after they broke over the voodoo range level. I would think you probably wouldn't get there until you wouldn't actually take the trade until they closed a bar at like 59.50. But one way or another, your stop would have to be under like 23.50. So that's a huge stop, right? That's more than 25 points. 6, 5, 4, 25. Yeah, 25 points. Like that's a big stop. Like you want to lose like $500 on every. I mean, you know, if you're playing the micros, you're risking over $50 per micro contract. No, I'm sorry, over 90, right? Because it's $2 per micro. Every micro, it's $2 per point. So with 25 points, that is yeah, that's right. So 2 for everyone, not 1. So I mean, it's 50 points. I believe it's 50 points per contract. Yeah, 50 points per contract. Most of us are not trading one MNQ contract, but we would to trade a breakout like that, you would need to risk $50 per micro contract. Most of us are not willing to do that, right? And rightfully so, because how often do you then get 25 points in extension, right? I realize this time you came pretty close. It almost hit the voodoo range there, right? And it makes sense to think that it would go to the next voodoo range level, but it doesn't always, right? So I don't personally buy the breakouts when I think it's bullish. I wait, rather than buying the breakout, I would buy this, right? And I realize that sometimes you get this midpoint signal, and even though it looks bullish, it just fails and then brings you back to support and then bounces, right? You have to be okay with that if you're gonna buy these like what quote unquote cheap momentum trades. You have to. Like there's as far as I can see, there are two options. Either you take 25 points every time you risk 25 points every time you buy breakout, which is like not for me, or you risk that you might not break out, but you only risk maybe 15 points, right? From 23 to 40. It's not 47. It's one before that. 41, right? So let's say like 12 to 15 usually. It's usually under 15. On the 24 tick, it's usually on every bar. Usually prints within about 15 points. So 15 points of risk for most people is a lot more manageable, right? Because now we're talking $30 per contract of the minis. I'm sorry, the micros, or $300 for the minis. So it's for most people that's a lot easier than 50 per contract, right? Because like I said, most of us are not trading one. It's just because of commissions and stuff. It's pretty hard to make money on one contract. So, if your risk for the day is like $300 or something, like you're only going to be able to take one or two of those breakout trades. Whereas with these, I can maybe take 4 of these. And so even if I only have a 50% win rate, right? It's probably less than that. Let's say 40% win rate, right? Actually, it's significantly less than that because the breakout works like 30% of the time, right? Buying the star out of position works less often than the breakout, but stick with me. It works way worse than when it comes here, right? This is probably 60% to 70% down here. The breakout would be about 30%, and then you'd probably go down to like 25% here, but you've halved your risk, right? So as long as I think I'm getting 15% here, is my logic, better than 15% odds that this actually continues not just to here, but goes higher. As long as I think 15% of the time that happens, which like I said, I can use these indicators at the bottom to give me a pretty good feel for when that's going to be. Because I'm only, then in that case, I'm not going to, if I did that over a string of 100 trades, I'm going to be in the same position or better as the trader who's buying the breakout, right? If you think it's 30% for the breakout and 15% for this, and you have half the risk, let's say, it's not exactly half, but let's say it's half, just to make math easier, then you're in good shape. Now, the other reason I like buying here rather than here is because I can actually take off half of my trade here. And I know that messes with the profit to loss, right? Because you're only buying breakouts because you think it's going to go a lot higher. But what I do like about this, when I know the conditions are right, is that even when this breakout fails, I can actually pick up 15 points, 12, let's say. So now let's think about it this way. Let's be really conservative and say 15% of the time, this midpoint star, right, breaks out. I think I can do a little better than that with indicators, but let's say that's 15%. I think that's pretty reasonable. It made a higher high, it made a higher low, and it showed a sign of aggression at the higher low. Usually you're going to get 15% or better here. I think that's pretty reasonable. 30% of the time, let's say, it might be a little less than that, 25 to 30% of the time, this breakout will actually succeed, and your runners will take you up to maybe the next voodoo range level up here. Sorry about the dings. So like this, right? So this would be that rare 30% of the time, right? That unusual situation where you get the runners to pay you twice what your initial exit was at, which is great because it's as if you took 2 full scale trades, right? Scalp trades. You'd make the same amount by taking half off here and half off here, right? Because this is half a voodoo range, this is a full voodoo range. So since this is only half your position and this is half your position, right? It's as if you took 2 regular scalps at full size. But like I said, you're only going to get that extension 30% of the time, which is why I'm taking half off here at this voodoo range level. And sometimes 2/3 if we reject and I'm still in profit. I'll go ahead and drop another quarter to a third and then leave a third to stop at my regular stop. But like I said, I get that extra half position off even when this pops and drops. And in my opinion, that's just better. And psychologically, it's so much easier than trading momentum, right? So, all right, let's back up, and I'm going to show you the beginning of the day. Because I think today's price action was really unusual. But I just wanted to show you that real quick. I will get to the lower indicators in a minute. But I know people want to see the review. Oops. Okay, this is overnight. So I'm going to do the review quick, and then we're going to talk about where these indicators come from and how I'm going to build from there. I might take a little break and then come back and talk about if you guys want to build something like this, how you might start. And if there's people who want to interact and ask questions, feel free. Just put it in the chat pane. But let's take a look at what happened overnight, and then I want you to watch these green, and then there's also red. These are the new indicators that are basic. They're based off of this lower indicator here. There's actually two separate derivatives of a rate of change angle, which I'll explain. But the important thing is to remember that the red ones are basically occurrences where it's not aggression to the sell side. That's the stars and the triangles and the diamonds, right? That would be a sign of aggression. This instead is a sign of a pivot, right? Now keep in mind, not every pivot, like look at this one, it's green, right? But this pivot was not bullish, right? But what you can do, the way, first of all, the way you know it's probably not bullish, or it might not be bullish, I should say, is it's not at the apex of the rotation. See how, here, I'll back this up, make sure you can see this. So see how you've got a rotation up, you've got these little waves down, but the primary rotation comes all the way down here, and this is what we'll call the current apex of a down wave, right? Is here. The signal itself, the pivot signal, did not occur at the did not occur at the apex line. I don't know what's going on here. There we go. It did not occur at this apex line here that I'm pointing to with the pink. It occurred on the next one. See that? This is associated with the second bar from the apex. So if you were watching live, you'd see this bar print, and you wouldn't know it's an apex, right? It could you don't know the difference between this and this, right? You don't know if the next bar is gonna be down or up. Well, when the next bar is up, and it gets that green, but it's not at the apex, what we're gonna do, and we're gonna do it during the review too, so you can see how this works in real time, basically. So we're going to mark off the range of that bar. Okay, it's different when it's at the apex. I'm going to show you that in a minute. That's a lot easier, actually. But this is going to identify the range as a potential pivot. When we then go to the right, we're going to watch and see if we can get the VPOC, the yellow line, to get outside of that range. Did that? Okay, I just can't see it. Hold on. So I want to. There we go. Sorry about that. There we go. Okay, so I want to watch the yellow line after this green here, right? We're not gonna pick. It's green because it's a up rotation, right? But when it's not at the apex, it's not a buy. It's also not a sell. It's a indication that this location, this price range, is a likely pivot point in the near future, right? Or now. It could be right now, but it's usually on like the next test, right? So what we then have to watch is we have to watch and see where they develop volume outside of that range. It generally means we don't want to be taking trades inside of this range. Our choice is wait for them to test above and fail, or wait for them to get outside of the range and then usually come back and test it and reject. That's usually what we want. So here you can see if you were really on, if you were identifying this might be bearish, which we have some ways to do so, and you saw this little spike up and close below, but see how they put the volume just a little bit above that, but they closed it lower? That's actually pretty bearish, right? Now this star is not in a good location. See how it's not up here. So to short this star, or this one either, right? Both of these stars, you have to think that this is bearish enough that it's going to go beyond the normal range, which is the band here, and take out some supports. You could look at volume and give you an idea of whether or not that might happen, and I don't see anything that says that here, right? And then you can also look down here at these indicators, but one way or another, you'd have to think you were really bearish to take that trade immediately, and I don't see any reason to. But then you can see we get underneath the range, right? And now we get bullish signals. So because we have this green bar here and we identified this range as a pivot, we generally don't want to blindly buy here because there's a good chance that we're going to turn around in that rectangle, right? Not every time. Sometimes it's just going to rip right through it. But most of the time, this is what we're going to get. A test above it and a fail, a test inside of it and a fail, or it's going to run right through it and then come back and give us an opportunity to get long, right? Because sometimes it is a long, but oftentimes it's once it gets out, if it picks green, tests above it, trades below it, develops some volume below it, and then returns into it, it's usually a short in my experience, especially when it's coming off of this, because what it basically was saying is that it's bearish, but this move took so long that it started to correct in time, right? And so all of these indicators got brought down to the lows, and it basically, these are like acceleration, deceleration indicators, and so things just slow down, and you really can't push the market lower when it's slow, okay? So when this is slowing, if it's stuck down here, that's different, but if it's slowing down, in other words, it's going lower and lower, like that, but it's still undulating. See that? Generally, it's going to be really hard to push it any lower without first coming back up to the top to refuel. And so this is that refuel. See that? This is the refuel. This one happens a little earlier, and then this one, they peak at the same time. See that? This is just a little bit more responsive. I'll explain why. But what you end up getting is a rejection out of the pivot and then another red. See that? Now look, this once again is on a triangle. It's not on an apex. So what I can actually do here is just spread this out, right? Because it covers the same range as the last pivot. See that? But it goes a little lower. So again, now it's not a sign to short right away. I could have shorted the star if I thought it was bearish, but this is not a sign to short right away. It's a sign to assume that this is going to be a pivot and to observe volume when it comes back in to see what it does. So it trades under, it trades into it. See that? And it rejects. See that? So now it's given itself a chance to kind of refuel here. And now it can continue lower if it needs to pretty easily. So you can see that this red would not have been a bad place to sell, but it's not the way I'm doing it. Because the problem with selling this is that your stop has to go up here. It really does. It has to go behind or above resistance. And in this case, it's not that much more than one bar, but sometimes it is. Like if you tried to buy this, your stop goes all the way down here, 25 points below or whatever. That's potentially problematic. So here it's not that bad to buy here and put your stop here. But what I prefer is actually to wait for this test back in to fail. And I'm getting, even though it's lower and it's near the bottom of this, what's it called? The channel, I'm okay with it because I've got this indicator that tells me that this is a pivot. Now, again, I showed you this before, but you can do the same trick with the volume. It's just further confirmation. So we obviously were about bullish, right? We have not put in another bigger bullish bar. So this was clearly the peak, right? Wave down number 1, wave down number 2, wave down number 3 didn't quite get over wave down number 1. See that? Didn't establish enough volume. So now we look back at this wave, and this wave. And between those, this is our highest right there. This down wave also didn't quite get higher than it, maybe just a tad. Right about, trying to put it right on top. There we go. So now you can see now we're dropping here, and we're already meeting that point, right? So any further down wave, and this will be considered will be considered to have bearish momentum. And you can see that that's exactly what happens, right? So if you wanted to be sure, you'd wait till, I think this one is where I can visually see. I can probably technically measure and see it's that one, but if I was just visually looking, it's this one, and that's right at the voodoo range level, right? Takes back the voodoo range level, puts in extra volume, and at this point it's like, okay, I want to be bearish. The problem with that is for trading to the downside, you often get one shot, maybe two, and then it just goes, right? It's not going to give you a ton of opportunities to get short. So for instance, you could have gotten short up here, or here, or here, is when the trade and perform algo went off. You can see this one actually is an okay place to short as well because it's so far away from the channel. I don't have the diamond on here. I just have my computer speakers ding when we get these. So it just alerts me that like, hey, you know, we're on. And in fact, it starts dinging here, right? So I'm already looking at my chart being ready to short anything that's bearish when it gets this far away because it's just so rare. And that same reason why you can technically buy this, but you have to just target the midpoint, right? So you're taking most off at like 12 points, and then maybe the rest off if it gets back up here, but it usually doesn't. So yeah, anyway, once it gets here and you've taken out this low and you've put in more volume, you should know we're not to trade mean reversion anymore, right? And so now it's going to go lower. You can see they put in a star here, which looks like it's out of position because it's like way at the bottom of this channel. But once you see the volumes increasing to the downside, right? And then if you look here, you can see that we've got all sorts of curves down, even though we're not at the very high. We're getting all these indicators are going negative. See that? So that's usually a sign that bearish momentum is increasing. Notice here you've got some divergence, like prices, or actually no, it's not, sorry. So we're getting more bearish. We're doing more, we're doing more aggressive business at the bid as volume goes up. So that's actually bearish. That's not divergent. That's what I was looking wrong. So yeah, all the way down. This is your first opportunity now for that even looks like a potential place to buy, right? And it is purple bar, green bar, which we know is often a good entry if you're balanced or bullish, right? And in this case, you also have, oh, thought I had that on. You also have some divergence. See how this blue low and this blue low and this blue low are going higher, even though these prices are going lower, right? And then this orange low and this orange low and this orange low also kind of make a divergent high. See how they're kind of rising, right? So there is some divergence, but then here we don't have any, right? And we've got the orange and the green and the blue flat on the bottom, right? Like it is flatlined, basically. And then you've got these little bars in the middle expanding to the downside, which means that momentum is building to the downside. So what all that means is that this would be a very aggressive place to buy. It doesn't mean it's not going to work, right? It could be the low, but you have to be willing to take this at least twice because it might not work the first time. I am generally not taking this trade unless it's in a very, very, very good location. And here it's not even at the voodoo range level. And honestly, even if it's bearish enough, it'll go right. You guys have all seen it. It'll go right through the voodoo range, come back, test it, and go lower. So you can't just buy because it hits the voodoo range, right? That's not good enough. So if I had a pivot like this from before, that might be a reason to buy it. See how it tested this old pivot, which I measured the same way here. If this is the first time back into it, then maybe that's a reason to buy, right? But usually this is going to fail when these are all just like dumping, and they're dumping not only from the top but also from the middle. See how they hit the middle and they still dump, right? So it's like the very first opportunity to buy probably won't go very far. Even if it does get some momentum, it's probably going to stop wherever this blue line is, or it's going to get to the midpoint. And when the midpoint intersects with a Voodoo range level or a resistance level, like I don't know, like here, right? These red lines. If it intersects with that, it's probably going to stop there, right? Now, once it's settled down, you can start to look for opportunities to buy. But I find buying this one is not. It's too frustrating when it doesn't work to pay for the times when it does. Like, I get spooked out of buying the good entries when I take all of these entries. When I take these, I get spooked out of the better opportunities. So here, you can see we've got a sign of life. Oops. We've got signs of life. Here, see that? I got a red line there, horizontal, and then a yellow line horizontal, right? This fast, thin blue line needs to be above this yellow line to have really any chance of it doing anything more than just like boop, boop, right? Now, the problem is if it's way up here at the top of this range, it's got no fuel and it's going to run out. See that? So like this, it went further than the midpoint. It hit the yellow line. Sometimes it goes over the yellow line and stays there if it's bullish enough, right? So it's not like it just rejects there. But we really shouldn't be buying once this has gotten up and beyond, like here, beyond the yellow line, unless we get a dip. See this? These little dips are okay to buy up there, but we shouldn't be buying. This is not the kind of dip I'm talking about. I'm talking about it's very bullish, and it's like got one down bar and it's coming right back again, right? And what usually happens is the blue is way up there, and the orange is way up there, and the pink bars, the purple bars are also way up there. Everything's stuck at the top, but this lower indicator had a little bit of a pullback. See that? So those little pullbacks, when everything else is stuck at the top, that's okay. But so for instance, this little, see how this pulls up and this green pulls up, right? But everything else is pretty much stuck on the bottom. That makes this a good short, these, because this is bearish price action, right? And this is way at the top of the range. So I know I might be going a little too fast. If people are confused, tell me. I don't expect you to totally understand it at this point because you don't know what they all mean, right? But I just want to show you how, even if you just look at the blue here, which is the fast one, and the blue here, which is the fast one, you really shouldn't, if we are undulating back and forth like this, or like this, right? If we're going up, down, your sells should be on this side, and your buys should be on this side, right? You should not be buying as that light blue line, that fast blue line is like diving underneath the zero line or diving underneath the red line. Like, this is not the place to buy. And this one, when it's flat lined like this, is usually not a very good time to buy either. Usually. There are some circumstances when it is, but same thing up here. When this guy is way up here, this is more of an opportunity for selling, as long as you're bounced or bearish. And then when it gets all the way underneath the green line, like here and here and here and here, these are your opportunities to buy. So now look, this one was associated with, here, I'll show you this one. So this dip was associated with this bar, right? I know technically we should be looking for, you take buys here. This is not a bullish bar and it's not a bullish algo, right? There's no reason to buy this just because this went down, right? And when it pops back up, I don't get any sign of any aggression. So I need both. This tells me the condition or the phase of the market. Are we bullish? Are we bearish? Are we neutral? And the algos are saying the participants, what they're doing. Are they aggressively selling? Are they aggressively buying? Are they getting absorbed? Right? Are they defending? All those things, right? Like looking at a footprint or a DOM. The only reason there's more than one line or more than one indicator is because they're looking at different rates of change and different derivatives. So, for instance, this green line here, angle derivative, is actually a further derivative of the acceleration of a rate of change of an adaptive moving average, right? So going the other way, if you print a moving average, everyone knows what that looks like, right? Just like a line on the chart. Like we could even say this gray line is a moving average, right? So that's just the moving average. Okay. The bars in the back, these pink, they're purple. They look kind of pink when they're behind the orange, but the purple bars is the pitch of not this moving average, but a moving average, right? So is it going up? Is it going down? And how fast, right? And so it's basically showing me the rate of the change of that moving average. And remember, this is a Renko chart. So moving averages for Renko charts are not based on time. So most people think of like the 50 moving average on hourly chart, let's say, of being the average price over the last 50 hours, which is true for a simple moving average. Well, Renko charts are not based on time; they're based on distance traveled, right? So if you, but when you use a moving average of a Renko chart, you are still looking at 50 bars back. Well, 50 bars, if you did a bar count, I'm not going to do it, but like imagine what this count looks like, right? Like 1, 2, 3, 4. Let's say 4 each, right? So 4, 8, 12. Let's just say it's not quite 4, but 16, right? I mean, you could keep going, right? And you'd get to like let's say 40 bars, right? 40 bars going basically straight up, straight down would cover 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, right? That 20. This is like 30 bars straight up and down, right? So if your moving average was looking at this price action, that 30 moving average would move, right? Because you've got 30, it would accelerate. Because for the last 30 bars, you've been going up and only up, right? So that if you had the 30, this is like, I'm not going to say exactly what it is, but it's kind of close to that. But you can see it's rising, right? Because the speed of how fast we are covering that range, the price range is expanding, let's say that way, right? Over the last 30 bars, the price range is expanding. Well, look what happens as we pull back. Again, like this gray line is what I'm talking about. See how here it starts to, not yet, but right here it starts to slow down. It's acceleration, right? The angle, the curve goes from linear to like horizontal, right? And sometimes it goes exponential if it goes high enough, right? You see, I'm sure everyone's seen that, especially with whole moving averages, which this is not. But then you can see that it tries to recover, right? And then turns around. So now it is dropping. Now notice, the longer the moving average, the more lag you're going to have in the signal, right? And this is the reason why people complain or make fun of retail traders trading with moving averages. I'm not a fan of saying, I like this moving average, I'm going to buy every time we test it from above. Because you're going to buy here, and then you're going to get stopped out. And they're like, oh, okay, I'll just sell every time it gets up there. Well, then you're going to sell this right here, and you're going to sell, and that might work, but then when it comes back up here, you're going to sell this, and I'll get stopped out, right? So like and then it'll go without you, right? And then finally you sell it here, and oh, nope, you get stopped out one more time, right? So like that alone, like I think the moving average, when it comes to the location on the chart, even on like daily charts and stuff, I don't actually think that that's that important when it comes to planning your trades. That's just my personal preference. What I do, it's just a personal belief. I know a lot of people trade, like would totally disagree with me and trade very well with moving averages. Kudos to you. Keep doing it, right? Nothing wrong with that. Like don't let anyone tell you that there is, because if it's working for you, then it works, right? It's just not my style. And that's just not how I use them. But what I do find useful is I find it useful to measure, or at least be able to visualize, what this moving average is doing, and not necessarily compared to others. Like there's like moving average cross, right? Like techniques where it's like, okay, well, maybe I can't just buy every time we touch the moving average, but if this moving average crosses the yellow line, I'm gonna go bullish, and if it crosses under the yellow line, I'm gonna go bearish here. So I'll like they maybe buy it, and like when it's bullish, this will work, right? When it's unidirectional, it'll work. Like you'd wait, you'd get a little chopped up here, but then you'd buy it here, and the yellow line gets over the gray line, and you'd stay long until the yellow line crosses under, which happens right here, right? So then you get out there, and it's like, oops, I got it pointing the wrong way. Sorry, you get it out right there, right? So I'm not saying that's wrong either. It's just not what I'm doing. But I am looking at a few different types of moving averages on a few different time frames and lengths, and a few different types of moving averages, not just simple or exponential, and using the acceleration and the rate of change, and then other derivatives of that, like how fast it's accelerating. And I'm using that down here. That's what all of these are, to tell me to give me an early hint at what might be happening in the price action, right? So here, I got a little bit off track, but that's okay. I will. It might make more sense to know what it says anyway. So let's quickly review what it means. So we've got the purple bars, right? Let me just show you. I'm going to make an indicator key. So the purple bars, which are these purple bars in pane number 4, is an adaptive rate of change, right? Which we said. So it's a slow, what we're going to call it. Okay, it's slow. This is the longest length moving average we have, and it is adaptive, which is a type of smoothing, not that important, right? Just the way to build the moving average would be to use an adaptive one and to use a high length, right? A length bigger than the other ones. That's all that matters. I honestly believe that the exact number is going to totally depend on how often you want to be in the trade, what your win rate needs to be, and what time frame you're using, right? So the exact numbers won't really matter, but just understand that this is the slow one, okay? The green line, then, is the derivative of the acceleration of this line. I don't have the acceleration of that line actually printed on the chart. I'm not using that one. The idea of using this, it's known as a third derivative, I believe, could be, I got second derivative of the rate of change, but third derivative of the MA, was actually another member in the Trade and Perform room who introduced this concept to me. So this combination is not my own, right? This was borrowed and shared with by others. But what I have been doing for a long time is looking at rate of change in general, usually of Hull moving averages and volume weighted moving averages, as well as acceleration, deceleration of those rate of changes. So the concept is something I've worked with for a long time. In fact, I even have a TradingView indicator that does this there too with the Hull moving averages. If you want to see that, let me know. I've got a private link to it. I'd be happy to share it. I can show it to you if you want. Just let me know in the chat. But the concept is something I used to use in swing trading, and I was primarily looking for divergence, which is definitely something that does occur here and is useful as well. So the other thing we have here is this blue line here, right? So in pane 4, the blue thin line is, and then this is the speed of this is fast, right? So again, the green, just so you understand, the green line is looking at how fast or slow this is changing, right? It's the derivative of the acceleration. how quickly is it accelerating. So not the rate of change, not how fast it's changing, how fast the change is happening, right? The rate of change of the rate of change, or the acceleration of the acceleration, if you will. So it's like, you know, speed, and then you get, you know, the rate of that change is the acceleration, and then how fast are you accelerating? That's what the green line is showing, right? The thin blue line here is the is a Hall moving average rate of change. Okay, so it's just the first derivative of a Hall moving average that is fast, right? The reason I have that here on this same pane is generally we don't want to be fighting that line. So when we do our coding, a very simple code would be don't buy if the indicator, the blue, again I'm talking about the blue line, if the blue line is falling from above, don't buy it. And if the blue line is rising from below, don't sell it. So that's in the most simple, and the reason is because what's happening when it's dropping from above is the moving average itself, the Hall moving average that goes back and forth with the rotation, is decelerating, right, very quickly after a period of acceleration, right? So period of acceleration, period of stagnant movement, deceleration occurs right there, and we get a pullback, right? It doesn't mean that every one of these turns should be bought or sold, but you certainly don't want to be buying here when it's decelerating after a move up, right? Especially if you think it's balanced or bearish. The opposite of that would be down here. You don't want to be a seller right here, right? Now, things change a little bit once you get a trend. And one of the reasons we have the purple bars back here is to show me the general direction of the trend and the strength of the trend. You could also use RSI for this. It's honestly very similar to RSI, or it's a little bit like using RSI plus stochastics. If you've ever used those two together, that's basically what I'm doing, but I'm just doing it in a different, I'm measuring momentum and where we are in the like how fast we're rotating and all that stuff. I'm using different measurements, but because I want to be able to adjust how many like with stochastics, it's a very similar concept where you're getting the up and down movements, but it's the range itself. It's contained within a certain area, whereas with the rate of change of the moving averages, it can actually go exponentially higher or lower. It's not at all contained, and so when you have that, like there's no normal curve here, right? So you can really see relative change, and therefore, in my opinion, you can see divergences really clearly. It's a lot more obvious. Like here, I'll show you one right here. This low is clearly, this low here in this blue line is clearly higher than this low, right? But this low is not clearly higher than this low. Now, the tricky part was that we also had a higher low here and a lower low here. So that's hidden divergence. So it would have made sense to get long here. Now, thankfully, this didn't actually stop you out. But if you bought on the hidden divergence, which isn't a bad idea if you think it's pretty bullish, you'd have to hold or rebuy after this. And like I said, when I get these red ones that aren't at the top, I'm immediately thinking, can I trap you and develop volume above? And you can see that we do that immediately. We immediately close above with the bullish bar, and POC is increasing, and then here we clearly buy it. We clearly get over it. So now any pullback can be bought. So you end up buying a little late in here, right? That's how you'd have to do it if you didn't see the divergence. If you did not see the divergence, you get the notification right here that it's definitely to be bought in that zone, and then that occurs, that pullback occurs right there, right? And then if it comes back to that area, you can do it again. But what I was going to show you is that on this green line itself, or no, I'm sorry, we already talked about that. It's the blue one. So the light blue, this whole moving average, gets all the way up here above the L line. See that? And it just flat lines. See that? So flat lines here. Yeah, flat lines here. Right, and it's going to be harder and harder for it to get exponentially. I might have explained that wrong before. I don't think it's a unlimited. It's not an absolute. The range is negative 100 to 100 because it is a rate of change. So it's I explained that wrong. It's not. It is captive between 100 and negative 100. But the important thing is it's exponentially harder to move the lines 1 point up the higher you get, and it's exponentially harder to move the line 1 point down the lower you get. So it's not that it's absolute, but it's like yeah, it's just, it requires a lot more energy to keep the line down here than it does to undulate back and forth. Hopefully that makes sense. I explained that wrong. So because the highest reading you could ever get would be like 99.99 or whatever, which would be very rare because you'd need a hell of a lot of momentum that's like sustained and then continued higher. But what you generally get is you'll get a flat line. So if you the blue angle here, you'll see get over 77 or so. Here, watch. It gets out here 74, 78. So once it gets over 77 is on this time frame is about where it starts to happen. You're going to see. I mean, really, it started back here. Look at it's exponential, right? We went from negative 43 to negative 25. So huge move here, right? You can see it. It's like it turned on a dime, and it went exponential. See that? So and that, like I said, that's why I have this right here, so I can see these, because right now that's what's making sense to me. But eventually, this is all going to be coded, just like I coded these background ones, because I've already done the lower one, which we'll get into in a minute. But the important decision point here needs to be this change in rate of change, right? So because the green line is just the derivative of the rate of change, when the what you'll see is when this background bar, when they start to flatline, that green line is going to start to drop if it's been up, right? And if it's at the lows or at the bottom of a rotation and it starts to flatline, you're going to see the green start to lift up. See how it flatlines right here at the midpoint? And you can see that the green starts to pick up, right? Because the deceleration has lost all the energy, right? So if you have a condition where you are pretty sure it's not super bearish, like let's say you were looking at it right here. It's like, okay, I don't think this is bearish, right? It might be bullish, it might be neutral. We're not totally sure. It doesn't. Let's just assume it doesn't matter right now. And let's say we got our signal here to get long. We know that there's a potential pivot down here. See how that's not at the apex? And then there's another one up here. So here's our two potential pivots. And we got over it, we back tested it, went higher, right? Printed it, got over it, back tested it, went higher, back tested it, went higher, went through it, backside tests, tries to trade lower, we get a buy signal right at the apex, right? So we know to get out of that short. If we short it up here, which makes sense, or I mean, really the short is here, the orange bar. Pink bar, orange bar is a great short, especially with divergence, which is what these purple and blue lines are, and the pink too. When those occur at prime locations, and you get the signal like green, purple bar, green bar, purple bar, orange, that alone is good, right? But now when I get this green behind it at an apex, I know in addition to all of the aggressive action that I've had, that I should expect there, that I also have a condition here where we spiked down and couldn't hold lower. And these are also rate of change. Okay, just not of whole moving averages, of a different kind of a volume weighted moving average and of different speeds. But it's basically the same concept. uh, and what you end up getting is this, because this peaked to the downside down there, and see how this blue couldn't do it? It couldn't even get out of this little zone in the middle and turned around. What that basically means is that while this looks pretty scary, right? Everything looks like it's falling. It's actually not accelerating as fast, or decelerating as fast as it needs to continue the move, because it takes more and more pressure. You can see we're all the way flatlined. See that? We're totally flatlined down here. So if it's bearish, it can stay flatlined for a long time. Just like if it's bullish, it can stay flatlined for a long time. But what this lower indicator says is, you guys, it's not that bearish. We just peaked down at the bear, at the furthest bear level we've been in a long time. Like, look, if you mark this off, relative to where we've been before, we haven't gotten this low since here. And see what happens when you get to these really low levels, right? You get a response often. Same thing up at the top. If you found the very highest level, not sure which one it is. It's that one. Okay, so this is our highest level right here, where it was going as bullish as it possibly could, right? It's accelerating as quickly as possible, and it got so hot that it ran out of steam. See that? Spiked up, ran out of steam. Right? Just can't go any higher. Then they tried to spike it, but they couldn't bring the bars behind it. See how this never got back above this green line, but the blue line did. So that's a sign of a short, because the blue line's all by itself up there, versus this is like, it's exhaustion, right? But the red line's up there too, so you don't know for sure that this is going to turn, but these ones usually will, right? As long as it's not bullish. Once this gets bullish, this all changes. So that's where this gets confusing, is that the exact same, like if all I did was looked at one of these, like let's say all I said was, and this won't make sense, but let's say that we say if we got a blue and orange above this green line, sell it, right? That's not going to work, right? It will sometimes, but here it will not. See that? You'll sell this, you'll get crushed, and then it'll go, right? Why is that? Well, it's because the phase we're in is a bull phase, right? How would you know that? Well, look, the rate of change bars are increasing, right? And the green is completely at the top, right? So like, even though they're going higher, and it should take a lot of energy to do that, they're still going higher. Now, you can see that the blue fell down, so our only opportunity to sell this if we were counter trend was right here. See where blue went all the way up above here. Let me get rid of that cross and do this. Okay, there's a yellow line here, right? Blue goes above the yellow line. Extremely difficult to sustain that. Extremely difficult, right? Need a lot of energy. You see no aggression here, right? No signs of aggression here. Then they get a speed bar down with a purple bar, meaning that people are pulling their buy orders, and immediately after that, because it's a really fast moving average that it's measuring the rate of change of, that rate of change drops back below the yellow line, right? And so this would be your only opportunity, and so you get a red here, right? That red is referring to down here, that this also spiked, right? But the reason why I wouldn't sell this, and again, I can mark this, and we can take a look at how we would fix this from a signals point of view. If I don't want to know about this signal, even though it did end up being a good pivot, right? If I decided I don't want it to look like this, I want it to look like something else, perhaps. Or I just don't want to see it at all because it's making me sell spots that I shouldn't, which happens. Well, then what you have to do is you have to code it so that it doesn't go off, even though you got all these conditions there where you had this spike. See how it was lower and it came up and spiked? And then the other condition it has is that this blue line down here, which is a faster rate of change, is dropping, and it was for that one bar. Unfortunately, it didn't drop any further, right? This one you would have known as soon as it starts to rip up, to bounce again, you would have known to get out of this because you're going lower, yet blue is going higher, and that doesn't make sense. That's consolidation, right? That's not bearish. This blue line is bouncing off this midpoint, which is the red zone in here, is considered all the midpoint, right? It started to bounce off that, and that's how you know. See, that occurred right here, here. So right at that very moment, it starts to pull up, and you really shouldn't be selling it. I shouldn't be selling it. So I could just say, don't fire, because look, pretty sure this bar, the blue, 0.031 is probably higher, yep, than negative 0.5. So a very simple fix for that, if I didn't want this signal, is I could try to optimize it by seeing what happens if I say that I, in addition to the signal that I already have, that I also need this lower bar, this lower line to be dropping too. Now the higher, the blue on the top was dropping. See how this 77.8 to 58.74. This whole moving average, this blue whole moving average is very sensitive. All it takes is one down bar and it's going to start to drop. So just doing, if you just say like, tell me whenever that bar drops, you're basically just going to see every down bar, right? And that's not going to be all that useful. The blue one on the bottom, however, is actually, here we'll jump down, we'll get, there's one more on the pane 4 that we'll come back to. Orange area is the slow moving average, Hall moving average, right? So just like the blue line, only much slower. Okay. On pane 4, the bottom pane, we have two different things going on. The orange bars are the is the derivative, first derivative, so acceleration, deceleration of the volume-weighted moving average rate of change. Okay, and this one is slope. And then, oops, that's pane 5. And then pane 5, blue line is acceleration, deceleration of VWMARLC fast, right? So this derivative, these are the same, but the lengths are different, right? Just like the orange and the blue. The measure's the same, it's just how far they're looking back, how many bars they're looking back is different. With the orange, and here's orange as well, always being the slower one, so it's not going to move as much. It's going to take a lot more movement in price to get it to move, and then it's going to stay there. It's going to take, because of that, it's going to get stuck up here for longer. So see how this peak occurs right at that red line? That's the peak. Or sorry, no, the peak is here. The red line comes right after it. That's right, because it doesn't know it's a peak until the next one comes, right? So this red line is telling me that this slow volume-weighted moving average peaked already, which is helpful. And then it also tells me that this faster one isn't oversold, right? Because again, once you get under here, you're not going to have an opportunity to sell. Like this one happened to work because you had all of these things working for you. All of these things are turning down, so you could still sell here, even though this started to turn up. So it would be right here, right? This would not be a very comfortable place to sell, right? You'd get pretty fucked up if you kept selling this eventually. Like it happened to work here, but it's not somewhere where I want to regularly sell. And now if you look at this one, you've got the peak of this bar was here, right? One before, and now we confirm that here. Now what's interesting about this is that it comes all the way up here, and it's still a good place to buy, right? So in the code, it's not just that it's like that the blue line isn't out here. It also takes into account where these lines are. And because these lines are where they're supposed to be when you buy, at the bottom, they're not at the top. And these are the responsive ones, right? It's the derivative of the acceleration, and then the very, very fast acceleration, deceleration. Or no, I'm sorry, very fast rate of change. Those ones are in the correct place. This fast acceleration is in an area where you'd think it should peak. So if you're not going to buy that, it's okay. We could filter this out, but realize that might be the low. But because it peaked above this green line, as you can see, what usually happens after that is a period of sideways. See that? And here it goes up a little bit and it goes sideways. See that? Now look at this one. This one, the peak on the orange, the peak to the bottom is here. We know that here because this one's smaller than that one, right? So we get the green line. You then look at the blue and you say, okay, we are nowhere near exhausted, right? So not only, and then we look here and we say, okay, lower lines below 0, right? And the fast one is coming out of this flat line. So this buy is significantly better than this one. And this one is the kind of buy because of where this blue line is, and honestly because of where this green line is. This is the kind of buy that you not only want to purchase here, but that you can also add to as it pulls back. I actually bought this because I was nervous. My friend in the Trade and Perform room, the way he views the green line here is he wants it to come down and touch the red line before he buys. So for instance, he would be buying this every time for a scalp, but this one, because the green didn't touch the blue or the red, and it basically tapped the red on top, he's expecting that this resistance will hold, which makes sense. You can see here we got above the red line. See that? And that's resistance. And so in other words, it took this much energy, right, which is like all of it, to get to that resistance. We dipped, came a little bit back up there. It got a little bit higher, but basically that resistance held, right? We tested above it, but that resistance held, and you can see that the green bar is not going any higher, right? It's now come underneath the red. So right there, you know you're looking for a sell because it's now coming down under the red. So we know we should be looking for a sell now. That's, I get the green line there. Now, if you sold this right away, you wouldn't get stopped, but you might get a little freaked out. You could wait for the blue to confirm, which happens here, right? Because it's kind of still flatlining up there. It does go down a little bit, but here clearly it's going down, right? So if you wanted to wait for here, I wouldn't blame you. And then you could look at the bottom and say, okay, well, we are a little bit lower than I'd like it to be, right? This is way up here in price, but look how much energy we've used. We're already way down below this previous low, which means that this move is probably the last drop before a period of consolidation, because it takes consolidation to build that energy. So it doesn't mean get out of the trade if you see this. It means take your profits at support. Well, support's here. So I'd take my profits here and I'd be out of the trade. And then what do you know? We come back and we play bullish again. Okay, I hope that's helpful. I'm going to come back and do the, now that we talked about the conditions that create the green and red lines and all the indicators in the bottom, I'm going to come back and do the actual review. And we're going to take a look at how those things looked throughout the day. And I'm going to go back to an average random day. And we're going to see if we can find any other patterns or if the patterns are exactly the same. And then if I still have a voice and an audience, we can build or optimize the signal to help us find better trades or to determine whether or not it's a trade we want to hold runners with or not. So give me 2 minutes. I'm going to run and grab a drink, use the restroom, and come on back. I'll leave you guys with some music and be back in a minute. So whenever I come up with an idea, what I generally do is I start with some hypotheses, right? So the idea is the only way to test whether or not an indicator is helpful or not is to know what you expect it to do if it was helpful. So we're gonna, and then I'm gonna do one other thing. We're gonna quickly name these so they match my studies. So hold on real quick. So let's see. All right, let me scroll down here and find all the studies. Okay, so we've got the purple bar graph, the adapted, the purple here is ID 70. Now this won't work for you guys. This is only in my chart book, right? But like this, you would just figure this out yourself. It would be, the numbers will be different, but it'll be ID 70.SG1. And so, for instance, if you go, I'm not going to do this for everyone. Let me just show you. So if I go down to ID 70, they're not in numerical order because disorganized. There we go. Okay, so the study angle, right? So bar. So this is the study angle, or 5 lengths of the adaptive moving average, right? So that is ID 80, and then you can look when you're in there on the subgraphs. So ID 70, SG1, right? So when I make my alert, I need to make sure that I have that. Like if I want it to signal based on the location of these purple bars, I need to tell Sierra chart to refer to ID 70.SG1. Okay, so the derivative of the acceleration of adaptive moving average fast is the green line, and that is derivative 59 SG1. Okay. So ID 59.SG1. Okay. The blue thin line is the Hall. I have them here. Short angle 87. Okay. ID 87.SG1. The slow hull is ID 88.SG. No, that's wrong. It's 84. Yeah. Okay, and then the orange bars, acceleration, deceleration of the rate of change. Rate of change. Divergence. Where are you? Rate of change oscillator. No. MA long. Here we go. Is ID 81.SG1. Again, that's the orange bars down here. And then the fast one is ID, let's see, MA short 83 SG1. Okay, so I've got all that. So now we can make a hypothesis, right, based on just like what we've seen in the last like hour, right? And just say like, I see this happens. Let's find out if it happens all the time or very often, right? So one of the things I said, again, this is probably the harder part of building a signal. Just so you know, like this might seem like tedious and boring to you, but like I'm doing this as a live stream because I think most of you have these ideas in your head. You just don't have them on paper. But once you get them on paper, once you get the logic right, like building the signal is not that hard. It's knowing what to look for and knowing what options you have when it comes to how to compare numbers or readings, right? So here's an example of a hypothesis that we talked about before. So we said that when the blue Hall moving average, right? So we're gonna call it it's ID 87. So fast Hall MAROC ID 87.SG1. When when fast Hull moving average rate of change rises and, right, so it's rising, and it's rising from the lows. So the exact number we're not going to worry about. And the, yeah, it's rising from the lows. And ID87.SG1 is above, we'll say, let's just pick a number for now. We'll say 75, let's say, negative 75, sorry, negative 75. It's usually going to be bullish, right? Now, the opposite's probably true also, right? So when fast Hull MA ROC ID87.SG1 falls and ID87.SG1 is under 75, it's probably bearish. Now, the other thing, I said two other things. One of them was that if this blue was too far gone, like in this condition here, this condition here, this condition here, this condition here, and this condition here, right? All those, that doesn't mean it's bearish, but I'm just going to show you. We're just going to just even, you know, we got some bullish to neutral here, right? So it starts, so this, it's rising, so it's fine. Here it's falling and it's up there, right? This is way up there and it's falling. It's not time to short yet, right? But once we get the short signal, it's okay. Here it's rising, it's rising, it's rising. It's way up there, right? We get a signal and it doesn't go. See, it does not go lower. See that? So it just because this is up high above the green line, which I think I have it set at like 3, does not mean that it's bearish right away. So that's important to understand, right? It's not that simple. But we can say that in that situation here, for instance, when it's not working, both of these, we can look and see what the difference is between this and then when it does work. So here, it peaked here, the next bearish move went lower. Peaked here, the next bearish move eventually went lower. Peaked here, right? The next bearish move did not work, right? So this one, and this one did not work. This one, next bearish move, goes lower, again, not for much. This one did not. Well, the next bearish move would technically be here, and it didn't work, right? So whatever it is, I don't think I can do this across multiple ones, but let's just do it here. So, oh wait, that's the wrong tool. So it occurred here. This one was okay. Here. Right? This one we're going to say is okay. This one we're going to say is okay. And then both of these more or less failed, but primarily this one. This one is like, I know why this one didn't work. I guess we can mark it. We'll mark this too. So the ones with the purple did not do what we expected, which is when it gets to the edges, it gets exhausted, right? Instead, they continued higher. And so then we have to ask, okay, what, oops, I did those in the wrong place. So what is it about here? And then this one is this. So what is it? Is there something similar in all of these conditions? Is the next thing we have to ask. Because then we can probably figure out why it wasn't working. Now we can also look at the lows, right? Because now this is a little bit more bullish. So let's look at the lows. When it's underneath here, is it a good time to buy, right? So here it got underneath the 3. The next bull would beat you, right? So we're going to say that one is a fail. So we're going to mark, oops, we're going to mark this. Yeah, and that, right? So that's a fail. Then technically this one went below 3, right? The next bull clearly failed. Not even close. So this marker was doing that. And then we this one, right? Market went up. That one failed, right? So right now this is looking like it doesn't work at all, which is possible. It might just be a bad hypothesis, right? It works a lot better on the whole moving average than it does on the weighted moving average. That's what I'm noticing. Then we have this one. This one works, right? Look, we got all the way to the bottom. The very next bullish one works. So this is the good one. So let's mark this. Oh, whoops, not that. So we're gonna mark this with a, oh, okay. We're gonna mark this with a different color because this one worked. Okay. Green might not have been the best choice, but that's okay. Copy, move. Oh, I can't move it to a different one. That's okay. Oh my goodness. Okay, so then, so that one worked. And you can see that this is the conditions here. We're gonna make this green. So that one worked. Right, and then, okay, next time we got underneath this here. Come on, here, right? I'd say this one worked, right? So similar situation here. So now I can copy and move to here. And same with this one actually. So these both worked. Right, we don't, it's right here. It's the next one, right? So, oh, and then we're gonna just copy this. And again, this is a tiny microcosm, right, of backtesting. So realize that your hypothesis might not be solved just because it worked here. Doesn't mean it's gonna work every time. And then it didn't quite reach here, right? That might be another signal because that's a pretty damn good indication that you might want to be bullish, right? And that I never really saw that happened here too, right? And then it popped off here too. So that might, maybe when it doesn't reach 3, but it comes close, that could be a possibility as well. But anyway, let's look at the ones that really worked. So, and then compare it to the ones that didn't. So I believe the bull side should be a little bit more accurate because this is bullish price action at this time of night. So here, what was happening? Well, we had the whole moving average rate of change, like at the low. Here, we can move it over here. When this went off, which is, here's the low, right? That's where it starts to rise. We have the angle under 60, which is this red line. So the angle got underneath 60, which is like what my friend said he's looking for. We have the whole moving average below -75, which is the yellow line. So that one's really down, right? It would take a lot of energy to keep it down there. And then the short-term haul, or sorry, the long-term haul is at 35, which is inside of the there should be, oh, I must have erased it somehow. There should be a green here inside here from 40 to 40. This must have gotten erased on accident. So from 40 to -40, and this is arbitrary depending on your time frame and stuff, but approximately there. That'll work. We're gonna lock it and we're gonna extend it. So extend. Where the heck is it? Right here. Okay. So whoops. So yeah, right here, right, we're looking at this. So this, see how the orange is underneath and inside of this mid zone here, right? Inside there. It's not way at the highs, it's not way at the lows. It's also kind of, it's dropping down, right? And these purple bars are below the 0 line, but also within this midpoint, right? While this orange is peaking at the low, right? So that's a condition that seems to be pretty good. We got the notification here, and then we get continuation. Okay, so here's another one that works. Okay, and let's see if this is similar or different. What's going on here? So the bottom happens right there. This is really your first opportunity where you would actually know about it, because you wouldn't necessarily by this, right? Just because it goes down there, it has to actually go down there and come back, right? So once it comes back, this is what you see. You can see in this case, the orange -4,468 is actually lower at the low, whereas here it was not. See, here it was -3 and then went up to -8. So the reason we don't get a green line here is because this is actually peaking to the low side right now as it bounces, which is unique, right? And then you can see that the orange line, the orange here is falling, right? And it's falling through the 0 line, and the green line is also falling through the 0 line. But once again, the blue whole moving average is way down here at 75. So between those two, oh, and then the purple, again, is within the midpoint. See that? It's right here in the middle. It's not super bearish, right? But also, like, it's not like this. When it's really bearish, it looks like this. You just kind of don't want to buy anything unless you have a really good reason to. Like this one happens to work, right? But like, look at how different this looks, right? So here, you get the peak to the downside. Man, I can't do it down there. Way down here, right? This is the peak of the blue. Comes back up. Then you got, for the orange on the bottom, you had -1.2, -1.2. So the orange on the bottom is flatlined near the middle as the blue jumps up, right? And then here you've got, once again, the Paul MA below 75 at -75, at -77. You've got the orange way down low, right? You've got the green approaching 60 but didn't quite reach it, right? But look at the purple bars. They're all the way down to 58. Now, my line for those purple bars when it comes to whether or not it's too bearish to buy or not has been 40. That might not be quite right, and it might depend on where these other lines are. Like this one, for instance, might change that. But generally, when I see that purple bar that far down there, I'm just not going to buy any of these signals, right? And so yes, I would miss that. If I have to accept that I might miss that, and the only way to catch it is if I can find another indicator where this looks different than all the rest of them, right? And so far I have not found that, and that's okay, right? I'm fine with missing that one because eventually it comes back. See, once it gets to this bar, well, now I can clearly see that we're getting bullish, right? We've got this, it's still pretty bearish, but here's our last bull bar, volume bar. And down here, you can see we're dipping at the 0 line, right? But look where this is. It's way at the top, right? Usually not when you want to buy. And so they have to, in other words, they've got to come, they're going to have to retrace first for me to be interested. But now it's retraced. See that? Oops, sorry, went too far. Now it's retraced, but it's dropping, right? This one is heading higher, and it's actually approaching this like overbought zone. But look how close it is to that high. That continues higher a little bit, right? So this turns out to be an okay place to buy, and not a great place to sell, which is not what I would have expected, considering that it's just up there. Like it's so high up that the blue line here is so high up that it's not. You'd think that it's not going to go that much higher, right? But it does have a scalp left in it. It's just that the next pullback is probably not worth buying. So that might be the way to think about it. Is that, let's see if that's true. Let's see, once we get a buy that occurs up here, is the next time it gets exhausted like that, does that get sold? Right? So we wait until the next time it gets exhausted, right there. So the question is now that it was exhausted at a very like off-tempo spot, right, at the lows, meaning that this burst of volume here might have been like people covering, right? Because you really wouldn't expect buyers to show up with this much exhaustion, but they did. So maybe they did because this move was so big, right? But then in reality, we're in bearish territory. If that's the case, then once we get back up there, it should reject. And it does. A little bit, right? I had a signal up here. You can see that the Hall MA, the blue one, tried to get to the yellow, but it got stuck. 74 did not make it to 75, which is the yellow line, and then it turned. Okay, so that 75 point seems pretty important, right? It might make sense to wait to see if it's going to get to 75, and then if it rejects off 75, or it turns down, and turns down, or it gets over 75 like this. See, it's 83. It's really hard to keep it going like that. Watch what happens when it drops under 75, right there. So here, price dropped to the voodoo range level. This was still at 80, right? Potentially, it could continue higher, especially with that dip, you'd think. But the very next one goes lower, and now we've clearly gotten under 75, so they continue the dip, right? Catch late shorts down here. Now look, this is already exhausted. See how these two are on the opposite sides? That might be relevant as well. So this is all the way at the bottom. This is all the way at the top. The result is not that you don't get a bullish move, but but once we get this one low and this one high, or possibly the opposite as well, like this one low and this one high. I don't see any in the situation, but in this picture I don't see any. But this is clearly unusual, and this may mean that the next time that we get back up here, that we might want to sell it. So we might not sell it there, but once it gets like right here, right, it gets exhausted, puts in a lower high, that's probably a decent sell. So here, this buy we said worked, right? We're gonna erase some of these. Okay. So here, these were all sell signals. Okay. No. Okay. No. Okay. So these were all potential, like this would be potential sell signal here, right? And then it would trigger there, but you would need to think there's lots of momentum. And the problem with that here, in my opinion, is that once again we have this blue line all the way at the bottom, almost as negative 75. And so selling it there means you're not going to have a whole lot of room. Doesn't mean you can't scalp it, but it's probably not going to go very far because it's going to flatline. So it's going to have to be like uber bearish to go any lower. And it also means that once it does flatten out like this, that there's a good chance that you can get a bull, a buy. Right now, this has peaked to the bottom, this has peaked to the bottom, this has peaked to the bottom, this has peaked to the bottom. All of the potential here is to the upside now, and that's where it ends up going. It goes, but it's interesting to go sideways first, like we talked about, because these didn't quite line up. Like this one isn't right. See that? It's not at the bottom, so it's not really ready to really take off yet. Now here, this is at the bottom, blue's at the bottom. And these are actually trending down, right? But that's going to mean that they have lots of room to come back up. I would think that would create a bullish opportunity. Yep. Okay, so how do we turn that into a signal, right? So what I would say, the very first thing, and again, we'll keep testing this, the very first thing I see is that we need both for a big buy opportunity. The ones where not just a scalp, right? You can scalp just about anything, but let's talk about the opportunities where you can buy and hold runners, right? So let's bring this back. Okay. When fast Hall MA RLC ID 87.SG1 and the so that's this one, right? Pane 4 blue, and then also the blue acceleration deceleration, so we're gonna say the VWMA RLC acceleration. Oh, there you go. Let's see, is it at the lows? Is that the way to say it? How low does it have to be? That's, I guess, the other question. See, in this case, it's a higher low, right? One way I like to do this is I'll take wherever the highest is, like here, and the lowest is here, right? And then extend that. This is like kind of too many lines, but you can start to look and see where the thirds and the halves are. So you can see, like, between those two, look at the half point, the 50 point, and you can see that, like, all of these bottoms are below that 50 point, right? Clearly below the 50 point, and in fact they're below the 38.2 also. And then the other one is and then the other one is this one. So, and that one's going to go all the way up here to all the way down here. So it's basically the whole thing, and the 50 line is going to be in the middle, right? So it could be as simple. Whoops, I keep hitting the wrong button. So it could be as simple as they're below zero, but rising at the same time, right? So here, both below zero. Not the top one's not rising yet. Right there, it rises. So that would be a good opportunity, and that one works. And then here, both below zero, right? And both rising. Boom. Right? Let's see if we can find another one. Right here. Both below zero. Top one's not rising yet. No, they're both rising. Does that still produces a little something. Now the problem with this one is that the peaks, this one continued to go lower. So by the time this was rising, this one was basically back into that zero. It was already on negative 0.5, right? Even by the time that was rising. And the problem was that it wasn't rising here yet. It was still underneath 60, right? It's okay that it's under 60. It has to be rising. And then so here, like, see how they're both like up at the tops, but the one on the top is still rising. See that? Still rising, still rising. Now it's falling. But look where this one is. It's at the bottom. So now that's going to be consolidation. See? So it doesn't mean it's not going to go lower, but you're going to have to hold through this, right? And a better opportunity might present itself. In this case, it doesn't. This one gets stuck at the zero line and turns around, right? And you know that it might be time to go because you've gotten the blue line once again above the orange. That should be a good sell most of the time once it turns down, which is right there. So that should be a sell because you got this blue above the orange. All of them are falling. The problem is this is so far down, right? It's almost at the very lows, so your target wouldn't be very far away. I mean, this one takes out sport, so it doesn't seem like it's that big of a deal. So now they're on opposite sides. So one's at the zero line. Yep, and you get, so here, this one's clearly low. This one's, we're going to say inside of this, like, the zero area, right? Between negative 0.5 and 0.5 is where I've got that red marked off area. So that doesn't mean that it's not a buy opportunity, right? If anything, it should be a buy because this is so low, and so is the orange, and so is the green. So everything has room to the upside. This orange is also very low, right? So everything could definitely rise. It's still below zero, interestingly. And so they're both rising, and they're both, oh wait, is it rising? It is. They're both rising. Ooh, this one was dropping right there. See that? Dropping, dropping, dropping. It wasn't until here. So you'd be a little late if you waited for that lower one to drop when it's at the zero line. So that's interesting. But if this top one is above negative 75 and rising, and this one is at least, it certainly needs to be rising, but I'd prefer this to be down here, right? Because in this case, it's going to consolidate. it's probably not going to immediately continue bullish. It's just going to consolidate. The good news is that resistance is all the way up here, so it's still worth buying. And then here we get both of them basically at the highs. See that? And they both drop right there. See, this one was up here at 83, then down to 81. One on the bottom was at 4.1, down to 1.4. So in this case, it meets the higher. It should be a pretty good short. The problem is that orange is rising. See that? So it's like going against the grain. So let's see if that matters. Nope, doesn't. I mean, it gets another good move, right? So even though orange was rising here, it didn't really matter. It just turned around and went lower, right? And it's possible that you might not need all these lines. Maybe you only need two, you know, because the two blue ones seem to be the most helpful right now. So here too, you got this underneath. You got this underneath. That means that this should be, and they all are rising, right? The top one, 83 to 81. So it's not quite out of that negative 75 like potential. Sometimes it gets stuck down there underneath the yellow line, but the potential is here for it to go higher as long as it's not super bearish. And it does. Nice. Okay. Here's another example where the HLMA clearly indicated that we should be selling, right? It got up, touched the yellow line and turned around. But look how this one is now already like oversold, if you will. So it probably doesn't have very much energy to go lower. And it just barely dips. Right? So far, with just the blue lines, we can make a lot of pretty good predictions. The tricky part is if you don't get long here, right, you need to know that that support is also viable, because here you now have the green line turning up and the orange line turning up. And so like momentum is actually increasing, so you no longer need to get this so low. In other words, there's divergence. See how this was a low, this is a higher low, low. I guess that is a higher low, so not divergent, but you know, you just don't need, it's going to be really hard to get this back down here if it's bullish. Like you want it down here, but like this is actually okay, right? So it's not just that the blue line is so low, it's that it traveled from the top down and now turns around. Now this one, it didn't quite turn here. And we saw in the past that meant that it needs some time down there. Let's see if that's the case. No, so that, but let's see if it does, it might return there though. Does it return there? No, it never returns there. Okay, so the trouble with this is that you got one chance basically. Like this one was tough to see because this was the midpoint, right? But you might have caught it. If you miss it, this one clearly is a good one. You got a peak down there, right? And my signal would have come if we would have gotten a blue, right? Or sorry, a green line here. But the fact that we got this little dip, like messed with my signal, because even though I got this low, correct, the very next bar it didn't continue how I expected it to. So you'd think that this one would turn green, but it didn't, because it anticipated a pullback. The pullback came, right, and it didn't take out the low. So in essence, the reason why this lifted in the middle, like yesterday, this is Tuesday still, is because everything was pointing to go lower, but bears didn't have any energy. Now, you could know this just by looking at the trading perform, if you have the algo. Once again, just seeing that star to the downside at the lows, when things are not very bearish, you can see that this is rising, this is rising. They're at the bottom, right? You need to push really hard to keep it going lower. That is clearly the right interpretation. It's turning that into a signal that matters. So let's update this because we've got a little more information now. Okay, so when fast HLMA ROC, which is this blue line, right, and the lower blue line, the rate of change of the volume weighted moving average price, which is ID83 SG1. Oh wait, that goes over here. ID83.SG1 are both rising, right? That was ideal. and then we're going to say for sure and ID 87.SG1, right? This guy visited the lows recently, right? It had to drop and visit the lows recently. Now, what about this? What about this? So here's an example. I even marked it. Here's an example where we came down to negative 65. It tried to bounce. This got real low. Tried to bounce. What happens here? We get overbought, consolidate, and it's done, right? So this one is basically a divergent high. See that the volume went down, but price went higher. So this is shorts once again getting squeezed, right? They both got up there. This consolidated, got all the way down. So we don't want to buy that. That's important. This one. We don't want to buy that one, right? We don't want to buy this. And the problem with this is that even though we visited the top and we visited the bottom, the lower indicator is now already overbought. So maybe the easiest way to say this is they're both rising, or, well, wait, in this case, this top one isn't rising, is it? Good. So it wouldn't even signal here anyway because it's not rising. But let's say it was, right? Like here. Nope, not rising. Okay, so there it's not rising. Okay, so here it's rising. Here it's rising. That one's okay. Not rising. Right, so we said that this one is the hard, this is the one you might not catch if you waited for this to be rising. So but this is clearly higher. It's visited the yellow line, and now it's higher than 30, so it's practically in the midpoint, right? And this one visited -3 and came higher, although it's way overbought now, so you'd think. You can see it just totally takes off. You get this opportunity where it comes back down to refuel, but now this one's a little bit overbought, you'd think, and this is starting to turn down. I would think this would not be a good time to sell or to buy, but probably not a good time to sell either. You can see the purple bars are starting to creep up to this 30% line, and they're the 30 line, and the orange, which is the green or teal background, and then the orange is clearly still rising, and that's a longer term one that's going to influence. But there might be a sell up here too. Like this sell is probably better. It's visited the yellow now and it's starting to turn down. It's at 62. This one got really high and is turning down now. I would think that would be an okay sell. Yep. I think that's fine. Okay. So I targeted something up here. So let's see. Let's see what's going on here. The dings just tell me that the price action is moving up, but we're not gonna. It's early Asia. I don't really care. So we did gap down though. Might be a trade. I don't know. Okay. So why isn't this a sell? Right. We have this like quote unquote overbought. Sorry. This one's above 65 but below 75. It's rising. Right. So we shouldn't be selling it yet. But right there, it turns down. It's underneath 75, it turned down, and this is clearly turning down, but you can see that this one is way below zero, right? Way below the zero area. And while it gets a drop, the drop doesn't last very long. That makes sense, right? This peaks up at the top at the same time as this is down here. So these being on opposite sides like this, where this is way up here and this is way down here, or this is way up here and this is way down here, I would think would bring about consolidation first. I would think. But in this case, they just pump it, right? And so let's see if there's something that would have caught that. So this would be your ideal buy spot. You did visit way low, right? That low was -6, right? And it didn't even take out the low, yet it hit -6. This one only hit -56, and then immediately bounces back up. So perhaps when it dips down but stays above, let's say 60, and the orange bars are bullish, above like 0.5, let's say, as long as the blue line is also rising, because that means it has room up on the top for continuation, we're saying, and perhaps as long as the green line is rising, here you can see it actually did get underneath the 60 in a row, and so we should expect this to be a buy anyway, that this actually could become a really good buy. And so in this case, it doesn't actually matter that the blue didn't make it that low, right? Because first of all, it made it plenty low over here. It tried to go and then retraced, and because this is all the higher time frame levels like this, and the purple and the orange are all, and this orange back here are all bullish, it just it doesn't have any chance of going lower, right? So let's see if we can find a situation like that as well. So it's that both orange indicators are bullish. This blue indicator went way low. Here, let's write this one down. I'm going to come back to the other one. The other one said when the fast Hallome and the acceleration are both rising, and I thought it was from below 75, but it looks like it's like from below, we're going to say 0. We're going to say bullish, right? And then probably the opposite the other way. We'll just leave it that. We'll keep it simple. And then we're going to say when, so when both orange, so orange area is Hallome ROC slow ID84.SG1 is greater than 0, we'll say, and the other orange one, which is VWMA ROC acceleration slow, should be fast. So slow is ID81.SG1. It looks like they're not rising, but they're above 0, right? And maybe it's above a certain level, like it might be like 30 or something. Are above 0, or maybe we're going to put question mark, and we're going to say above, in this case it might be like 130, right? So 1 for the low one, maybe 30 for the high one. I mean, it's just a guess, right? And that's how I indicate that that's just an idea. This would be bullish. Okay, so all these ideas are testable, and when we find one we like, we're gonna build the alert and see if it looks good. So that works. So here, see how this stays bullish? Oh, I forgot a key part of that. So in addition to having both of those orange ones on top, it's possible that we also need this purple one on top. Let's just see. Back here, if we have orange and orange on top and purple on top, which occurs right here, we have bull, right? So that happens. This orange on top is right here. This orange on top is right here. Bull, right? Continues until right here. That's not bad, right? Then here you have bearish, and then bearish happens right there. But look, you would not want to get short there, right? Because then you get beat and then it goes. So in this case, because this 0 line cross happened when these bars, these purple bars, are still bullish, like that's actually not that bearish, because this is like this is just consolidation, right? Because then look, it comes back up here. Now, you can see that it happens again here. You get orange underneath, and orange is clearly bearish, and then, or orange is below 0. This time it falls. So, so here purple's definitely dropping. Oh, the problem might be that blue's too far down. So here you got blue all the way down here, and you wouldn't want to short it anyway, right? So you need these conditions to be true, but then you also need blue to drop. Is that right? Blue to drop. Okay, so let's do that rather than purple. Whoops. Let's do. Okay, orange and orange are above or below. And the fast Holome RLC ID 87 G1 is let's say above I mean I don't think it has to be above 0. Let's see. Oh, sorry. It needs to be. It can't be up here, right? It can't. We don't want to interact with it short up here. We don't. Oh, I guess I'm doing bullish, so we wouldn't want it to be up here. Yeah, we wouldn't want to interact bearish once it crosses. Maybe if it's. Let me think about this. I want it to be. I want to find the spot where it's bullish. Then we can do the opposite. So it's okay as long as it's not. Let's see. This one right here. I said look bullish, even though, but the RLC is clearly way up there. See that? Is it rising? I don't think it should matter, because here it's technically it could be falling. I don't think it is. Let's just see. Is it rising? Right there. Yep. Rising. Falling. Okay, so we'll just say rising or falling. That's easy enough. Yeah, oops, I keep doing that. It might not be perfect, but it is rising. Okay, and then the exact opposite is going to be bearish. So far, I like that one the best. So this is going to be under 0. I did this wrong. And RLC is falling. Bearish. Okay, so there's our logic for that idea, right? And so just to, because it's getting a little long here, it's 2.5 hours. Let's code that, okay, and let's see what that would look like. Just because a lot of times that's easier than just going through this one at a time. So what we're going to do, it depends on what you want the signal to look like. I'm thinking another condition that makes the whole background a different color because it's going to last for a while might be best. So we're going to go to the bottom and we're going to go to, let's see, color bar. Color bar. Based on another condition, or is it, let's see, color background based on another condition. Here we go. Okay, we're going to need 2 of them. One's going to be bullish, one's going to be bearish. Okay. And we want to color the main price graph. We don't want a vertical line. Okay. For the bullish one, we're going to make the background like dark green. Okay. This. I'm just going to move this over so I can see it at the same time without flipping back and forth. So what we need to say is the condition is going to be an AND condition. In other words, when all of the following things are true, I want you to fire, right? So we want, and the bullish condition was ID84.SG1, which is the orange slow moving average. And for now we're going to say greater than 0. We might have to adjust that. And then we say comma for and, because this is, so whatever this says is what the commas mean. So ID84SG1 is greater than 0 and then whatever's in here, which is ID81.SG1 is greater than 0. Like I said, we might have to adjust those numbers. And the fast Hall MA is greater than what it was 1 bar earlier, right? Then we gotta get the whole thing with that, and then we hit apply. And I did it wrong. Let's see what I did wrong. And did I miss a period? I missed a parentheses right here. Okay. Apply. Nope. Something else. What did I miss? ID84SG1. ID81SG1 greater than 0. Both those make sense. ID81SG1. ID7. What did I do wrong here? Because it should be right here. Color background, error syntax. Okay, so there's a mistake here. Okay. Oh, I see it. I need one more parentheses. There we go. Cool. All right. So again, this is we're not doing this to say like buy or sell this or that, right? We're doing it to say see whether or not we're on the right track. A lot of features are selling off. Nice. That's fine. So the bearish one, we'll go ahead and make the, here, let me just say this is going to be we're going to call it bull ROC because it's based on the rate of change. Okay, and then we're going to call this one bear ROC. And then we're just going to take this. This other one's going to be very similar, except we're going to switch this and switch this. And obviously, like I said, you can't use the same IDs as ID. You'd have to build the lines yourself and all that. But the idea is the process, right? Like learn the process. Interesting. So we just didn't have that occur here. Hard for me to believe. Oh, I've got the wrong color. Ha. Dark red. Can I even see that? What did I do wrong? ID84SG1 is less than 0. ID81SG1 is less than 0. Parentheses are correct there. 87SG1 is less than. Falling compared to the previous one. It should be correct. It's not hidden. Did it just not occur? No, it definitely occurred. What am I missing? I'm doing something wrong here. Doing something wrong here. As you can see, I'm not a coder by training. This is not my cup of tea, but I've learned how to do it because I have to. Okay, what did I miss? 84 is less than 0. 81 is less than 0. The dots are there. Those are going in the right direction. 87 SG1 is less than where it was one previous, so it's dropping. Looks like it should be working. Background red. Did I change this? No. Weird. I'm not getting a syntax error. So, which means that the condition is so rare that we just haven't seen it. But I'm pretty sure I see it right here. So it should be coloring this. hold on, maybe I've got the indicators wrong. 84 SG1 is less than 0. Did I miss like, yeah, I didn't miss like an I or a period. That's what it usually is. 81 is less than, for now, 0. And ID87 SG1 is falling, meaning that the current value is less than the previous value. Okay, why would the bullish one work, but not the bearish one? That shouldn't matter. Main price graph. What in the world am I doing wrong here? This is below 0. This is below 0. This is falling. It should be happening right here. It's definitely working in the inverse. Let me make sure. Maybe it just, there's so many bars that it hasn't started to print. Sometimes that happens. I'm just too far back, and there's been so many conditions that it only goes 2,000 back. Let's do current conditions. Wow. Okay, green. I don't see any red. So that's not it. What am I doing wrong? It's not hidden, right? Not hidden. So the condition should be true where? Right here. Should be true there. Even though I don't really love selling that. And parentheses around the whole thing. That one has a parentheses, that one has a parentheses. ID 84 to SG1 is less than 0. ID 81 SG1 is less than 0. ID 87 SG1 is less than. Here, let me try less than or equal to and see if that, if it could be that it's just very rarely, because sometimes the downside. Okay, that's not it. What am I doing wrong? Enable. Make sure it's not that I just can't see it. What's funny is usually it gives me a notification that there's a syntax error, and I'm not getting that. Okay, let me just try something. Let me remove it. This one's clearly working, so we're going to duplicate that. I'm going to change this to red. Yeah, okay, so that's definitely working. Okay, now that's less than 0. This is less than 0. And this is falling. What am I doing wrong? Okay, it's a negative number in both these cases, right? Is this negative? So that's not the problem. The fact that it works on the upside suggests that the problem has to do with the scale. If it's working on the upside but not the downside, it's like the scale, or it's, yeah, because I just saw that it's putting it in the right place when it's positive. Let me see if I can identify which one it is by doing this. It's not going to be the, okay. So it might be ID 81. Perhaps it can't have a reading like that. Ah, okay, so the problem, the issue is when 81 goes below 0, for some reason it's not able to produce. Now what's, wait, or is it, does that mean it's this one? Yeah, so when ID84 goes below 0, it creates problems. ID84 was the orange slow Halame, this purple here. And I wonder if something I have set up just might not be right. Interestingly, this actually looks pretty good when you have it above, one above and one below. That actually looks better in some situations. That's interesting for sure. Here, let me just, again, we're not going to leave it like this, but okay, it's a little easier on the eyes. Because like this one, for instance, wait a minute. That shouldn't be signaling there. I'm doing something wrong. Something's not right with this. Hold on a second. ID 80, there's a problem here. Halame slow, 84. Do I have that correct? 84. Oh, well, it helps if I have the right frickin' thing. Okay, it's 86. Okay. Not 84, 86. This should fix it. Yeah, there we go. 86. Helps if you have the right numbers. And I'll fix it on the cheat sheet too. 86. 86 is less than 0. Now it should work. There we go. All right, so like I said, we're just going to look at this. So, and then I'm going to fix it here. Okay, so 86. Okay, we were trying to do something that couldn't be done. All right, so now what we want to do is take a look and just see what would happen today, let's just say, if we just bought and sold on those indicators. Not because I think it's a good idea, but just because just that way we're going to see if we're even on the right track. And then you can kind of try to optimize further. So let's just go back to the middle of the night. Okay, so here, clearly when it's bullish, we can go a little further, make sure we get some bullish action too. Clearly when it's, well, this actually doesn't look that bad. When it's bullish, now it's not getting you the bottom, right? You're not going to get the turn with this, right? This is big. I would say the better way to think about this is don't short rather than buy, right? It's probably not a buy or sell, but it's don't short. So you wouldn't want to short this. Wouldn't really want to short this. It does pull back into the midpoint, right? But it does not make it to target, which would be the blue here or the voodoo range level. So I would agree with this not being a good short. Interestingly, this is a different indicator, but that's clearly not right, right? That's just a pivot point. But let me just delete all that. So we could even turn some of this off if it's hard for you guys to see it. Just tell me if it is. I'll turn it off if something's distracting. But okay, so then here it triggers. Again, we're not going to get it way at the bottom because it's waiting for this to be okay. So if we want to improve this right away, what I see, if I want to get a notification here, I need this to be okay that it's a little bit lower. So let's fix this just a little bit. Above or below 0 doesn't quite cut it for the slow non-Halame because the volume weighted moving average, like not moving, is kind of rare. So really we want 81.SG1 to be greater than, like, let's say like negative 0.5. So that middle area. And that should help grab some of the edges because it's going to give it 0.5 like wiggle room. So this one just has to be less than 0.5. And that's going to help us capture a couple more trades. So I'll be a little more tradable. So now it comes in here. It says to hold it till here. Gets out right there. It says to get in there. So see how this one did signal at the right time? whereas the other one did not, right? That one just produced the pivot. This one actually would have gotten you in at the right time, so that's kind of cool. Okay, notice that it goes away, but there's no sell signal here, so there's really no reason to get out until here. And like without even looking at any of this, I would say that's probably a good place to sell, but I'm not sure. Let's see. Oh, nope, definitely not, because look, we got back in again. So anything that suggests we can go higher. Now this one, notice here we didn't quite get this. Even though this is bullish and this is bullish. And the reason is because blue dipped just a little bit, right? But you can see that it's still above 75. So one way to fix that, if you really feel like you need that also to be green, is you could put an OR function in there and say it could be what we have it now, or it could be all of that and or it could be all of that, but instead of having it be a rising whole moving average, it's a whole moving average that's over 75. And that way you catch these like flat line up high kind of situations where you know not to short. And again, I'm not saying we should buy all these, but clearly it would have worked. And that way, like you wouldn't see, because this would be 77, and so there'd be no reason to even sell your thing there. So here, I'll show you what that looks like. Well, let's wait. Let's go through it, and we'll go back and see if it would make a difference, because I think it won't. It'll just cover these, like here. It would have taken us. It might be better. So it drops us right there. So it would leave us green for this. That's the problem, because that's still above 75. And then it doesn't let you go till there, and so like you end up selling like at the low of the pullback. So you either have to like just know to hold on. Let's see how this drops all the way down. You know what doesn't drop is the green line and the orange line. So perhaps we can say if the orange line's above 70 or that's above 75. That might work. Let's see how many situations there are where orange falls under 70 and I still want to be bullish. But see, then I'm bullish all the way till here. Oh yeah, and then that covers us. So we would end up holding through this. And then here we're definitely out, because this is under 75, this is under 70. Right? So here you're definitely out. Hey, that's not that bad. Honestly, that's not that bad. If you're trying to catch the momentum moves and know when to let go, that's not that bad. Let's try it. It's kind of fun to show you how to do the OR anyway. So there's two ways to do this. You can either make two different indicators and have them be the same color or whatever, or what you do is you say and all this, right? Or this and this. Oops. This and this. So so or the following. Or and. So this says or anything inside of this parentheses, right? Which is and all this, right? And then since we got to the end of this parentheses here, right? This one right there. So actually, yeah, right? 1, 2, I need one more. I believe I need one more. Syntax can get a little tricky, because this is everything inside of here. I actually don't think I need this one. Well, whatever, it shouldn't matter. And now I put that again. Right, but now I'm going to say it's, am I doing this right? And, I forgot an and. So, all of this, or all of this, as well as rather than having it be rising, it could be that the blue, which we said was FASTA ID 87, SG1, is just greater than 7. Oh, this is bullish. So is just, yeah, greater than 75. We'll just stay long, right? And then you'd have to do it one more time. So all of that is an and statement, right? Everything behind that parenthesis is an and statement. Everything behind this is an and statement. Hold on, I think I've got one too many decimal things in here. This is for that. This is for all the ands. Oh no, that's just right. And all of this. I think I'm doing this right. I might do it wrong once. And then we also could say or and this, but the orange slow hollow May ID 86.SG1 could be greater than, I think we said 70. Okay, and then we have to put this in parentheses. And we need to close this and parentheses. And we need to close the or parentheses. And we need to close the whole thing. I think that's correct. Nope. One of them's wrong. Okay, there's too many or there's not enough. So, hold on. All right, I brought one too many in one of these. I can just, nope. Okay, let me try this one more time. Or this goes all the way to there, right? So, or any of these. I think this one is the problem. And then, no, one of these is wrong. Okay. So, or needs one, right? This one obviously needs one. I think I need one more here. I should have saved the other one because now I messed it up. Okay, so or and so the end statement applies to all of this. Oh, I think it's right here. The problem is that I closed it too early. So I think it's this. Oh, I don't have a freaking comma in there. It might have been right earlier, but I didn't have a comma there. That's annoying. Okay, so or I think that's correct because I got 1, 2 open, 1 open, 2 open, 1 open, 2 open, 1 open, none open. So now the or again, and now we say and 1 open, 2 open, 1 open, 2 open, 1 open, 2 open, 1 open. Do I end this again? Comma, and 2 open, 1 open, 2 open, 1 open, 2 open, 1 open, none open. I just got too many here, I believe. Or do I just need 1 all the way at the end? Okay, now I'm just guessing. Okay, I don't think I need that. Or all of these things, comma, and all of these things, comma, and I don't think I need the equal sign, but let's hope it's not that. Okay, or the following, and this, okay, comma, and this, parentheses, comma, and this, close. Do I just need one more? See, I don't know if I need one additional one. I think I might need additional one here. I'm just not sure if I counted correctly or not. I might have had it right the first time, and I didn't have a comma, and that was the problem. Okay. Make sure everything else is right. Everything else looks correct. So this one is closed, this one is closed, this one is closed, and this one is closed. But I need this entire thing to be closed. I think I need one more like that. Still syntax error. Okay, so this one is closed, this one is closed, this one is closed, and this one is closed here. Not actually sure I need that. I think I do. And then this one is closed, this one is closed, this one is closed. Oh. I think I'm close. Hold on. Did I get it? Nope. Okay. One more try here. Or the following. All of this. Okay, so I'm pretty sure this one does need to end here, which means we need the entire thing parenthesed again. This one needs to end there. And then this one needs an entire, that should be right. Okay. Yeah, let's see if I take those out. See, because this parenthesis is for that one, this parenthesis is for that one, this parenthesis is for that one, and this is all of the end statement, which ends right there. This one, this one, this one, and then this is for all the end statement, which ends right there. This one, this one, this one, and then this is for this end statement, and then this last one would be for the or statement. The only thing I can think of is that maybe we need one around the entire thing. Pretty sure I tried that. And I'm not just missing one? Nope. That's a lot. Let's see. That's clearly not right. Or all of these. All of these. Or all of these. It should be here. That's still not right. So I'm doing something wrong here. I'm not sure if it's the parentheses. That looks right. I've got this one closed. I've got this one closed. There's a comma. There's a comma. There's a comma. Comma, comma, comma. Comma, comma. Those are commas, right? They should be. Yeah. Or. Let's see. What am I doing wrong here? Something is not right. Let me double check the OR function and make sure I'm doing this right. Or, and, yeah, all of these things, comma. Okay, so I might need less. So maybe it's just or and yeah. Oh, this should be correct. Or and all this. Maybe maybe I get rid of these extra ones. That's it. I got to get rid of these extra ones. That's what it is. That's probably it. Did I finally get it? Nope, there's still something wrong. So, or following, and this, and see, I don't know if I need another parentheses. And the following, comma. Yeah, I'll have to think about this because I'm not, like I said, I've tried a couple different ways and I'm not getting it. So either I missed a period or something, I'm not sure. One way or another, we're just gonna do this. We're gonna take that. We're gonna go back to this one. The fact that this works tells me that. Now, like I said, the other way to do this is just to make a whole nother one. And then say this or that. Okay, so got that back. Let's save all these as like experiment plus, right? Just so that we have it in case I make another mistake. Okay, so what I was saying is that if you wanted to, you could now go all the way to the bottom and you could add another one of these, right? Actually, you would just oops, this one's gotta be bare. Okay, and then you would duplicate it, right? And then this one you could then do the other way. So now this one will be like bool RC2. Like there is a way to do this without having to make two. I'm having trouble with the parentheses for some reason. Or I did something else wrong in the typing, and I'm not a good debugger, so it'd take me hours to figure it out. But now instead of this rising, we're gonna say it's greater than 75. Although you would still now does this work? Yeah, so that fills that in, but that what it doesn't get is to say. I thought it's like this, or let me try this one more time. Or this. And then, since I put another one there, so now we're going to copy that. So, or this. So this, and then the comma says or, and then it's this condition, which is we want id86.sg1 if that's greater than 70. And then I think I might need one more. Nope, still not right. And, or all of this. So this is an and condition, everything in the following parentheses. This says or, and then these following, which is parentheses, all of this. Unless it's just, I don't think so. No, because then you wouldn't have, I don't think that makes sense. have to find another one where I used or and see where I'm missing a parenthesis somewhere. Or and condition, parentheses, the condition, comma. Oh, I found it. It's this one. Jeez. That's it. It's that one. So put is it just that? I think I actually figured it out. It's that first one before. So this is or. We don't want one here. This parentheses matches with this parentheses, closing the or statement. This parenthesis ends here, this parenthesis ends here, this one ends here, this one ends here, this one ends here, this one ends here. Uh-oh. The whole thing turned green. So I think I have the syntax correct, but something's not right because it shouldn't be on all the time. So it's saying it could be all of these things when 87 SG1. So I think I finally got it right. Is the fast Halame can be over 70, right? Maybe that's right. Maybe it just looks like that because it's bullish. This might actually be correct. It is correct. Okay. Whew. Okay, so there's the bull one. So now for the bear one. Okay, so for the bear one, we're gonna duplicate. We're gonna copy. Yeah, I knew there was something wrong with that. We're gonna do that. We're gonna go bear rate of change 2. Sorry guys, I'm just not good at coding. And then we're gonna copy this instead, and we're just gonna say that all of these things are likely reversed because we want the exact opposite scenario. There shouldn't be any overlap. And again, I don't think that this will work as buyer sell signals. It might, but it should work as what like direction we should generally be looking for. And it should cover, oh, interesting. So there's some overlap. Why would that be? Why is there overlap here? You wouldn't think. Hold on, there's a mistake here somewhere. There's a mistake here. 86 is less than 0. And 81. So 86 is less than 0. Six is less than 0. 86 is less than 0. 81 is less than 0.5. 81 is less than 0.5. 87 is under, oh, I know what it is, negative 75. Negative 70. That will fix it. Boom. Okay. So now that should be better. Okay. Interestingly, we get this guy so this shouldn't be red, it should be black or green. Something's still not right with one of them. Let me just see, which one is it? Could it be that I didn't do it right for the bear RLC1? Is this also not correct? Less than 0, less than 0.5, and falling makes it red. It's definitely not falling. So therefore, this is making it red. Yes. Oh, it's also green. Okay. So then it's in here somewhere. So it comes out as red because it's coming after that on the list. So it's painting it green and then it paints it red on top of that. So they're both true is what it means, which is a problem. So and that might be a problem with parentheses. It might be because I'm telling it to say it's any of these things because of a missing parenthesis. That could be the case. Because I think everything else is correct. 86.SG1 is less than 0. It should have to be and all these things. That's how I should be reading it, how I'm understanding it. 86 SG175 is definitely not. SG1 is less than -7. No, that would have to be this line here is not that. So that condition fails. SG1 or 87, which is the orange, being under -75. Is that right? Hold on. Bear. Okay, bowl 2. Make sure this is right. So 86 is greater than 0. 81 is greater than -0.5. Greater than -0.5. Okay. 87 is greater than 75. 87 is greater than 75. It's bullish if 87 is greater than 75. I'm not sure if I have that right. Hold on. This is why you write it down in regular words. So we have okay. This one we did. This is 2. Yeah. So bowl 2. We're saying when the blue line is stuck on top of 75, and these things are true, or 86, and I do have that right? 86. How long? Yep. 86 can be greater than 70. In this case, it is 36. So why is, because so that's failed and this is failed. 87 SG1 is not over 75. That'd have to be way up here. So it's not reading this correctly. It should, this just says and, as long as all of these things are true. I wonder if I need one more. See, this is how I got it fucked up before, though. I don't think I do need another one. Or comma, or parentheses and parentheses. I'm just, like I said, I thought maybe I needed another one here. And then another one here. And that would mean another one here. And another one here. I did it! Okay, cool. So there's that. And then bear. That was it. So open, close, open. See, otherwise it's any of those things, and I want it to be only when all of those things inside that parentheses is true. Because I say there should be some situations where none of this is true. Okay, so now the question is, does it show up in the correct place? I'm not sure, but we are going to find out. So when it completely disappears, oh, and then I'm going to save it. When it completely disappears, this experiment. Okay. Save all. Yes. Alright, so when it completely disappears, what it's telling me, like this zone and this zone, I know it's yellow back here, that's just because it's overnight. What that's telling me is that either the blue line is falling and either the orange down here or the orange up here is bearish, right? Which means we have at least neutral, if not bearish conditions. Or the blue line's not falling, but the orange is under 70, right? And like I said, I don't know if this is perfect, so let's just see. And again, it's not just like be long anytime it's green and short anytime it's red, I don't think. But what I do think it means is don't fight these trends. So it would be don't buy this. Don't buy this. Now it's interesting that it turns off right before this happens. And that occurs because this line comes up all the way to 2. So there's no buy signal here per se, but it's saying that even though this is all real low and this is all real low, right? This is not under negative 75, so it's not enough. Now if I change this to 73, it would still trigger red there. And notice I do get a buy signal there, and that's definitely it's not a buy, it's a pivot signal here because it's not at the edge. Like I could turn that off and say only turn green if it touches the bottom rail. That would be one solution if those green lines are causing problems. But they do produce really good pivots, and see now you know that pivot should be sold. Interestingly, this one doesn't keep you safely short, I mean, because this got so high, I guess. Yeah, it got over 75. And see, that it looks to me like that's actually okay. As long as these are also low. But yeah, this falling and this going up here makes that a little dangerous to stay short, but it does end up working. And then same here. That's a little tricky. This one, these are lower, this pops up. It doesn't really look like a buy, but it's basically saying like, if it doesn't continue lower, you probably should exit. Okay, so like this, like here, it's like, it stopped being red after a bear bar, right? And now it's a buy signal, and it's like, if you were short, you probably shouldn't be anymore. And then it says, go ahead and get short again. Okay, now here again, if you're short, you probably shouldn't be anymore. Notice this one is similar to this. It's just a pivot location, right? They establish above the pivot, they come back in, and it looks like they're gonna drive right through it. Nope. See, they try to go through it, they come back and sit on it, on that pivot, and now it'll go higher, I bet. Okay, there's the buy signal. Yeah, unfortunately, this told you not to be long because of this drop when these are low. And this is still within, so I could take it off if it's higher than negative 0.5. That would be one way to do it, because right now I have it anywhere anywhere below 0.5, and it is. I'll have to see what I think about that. Let me just see what this does. Yeah, so it looks a little scary here, and then it takes off, I bet. Yeah. So that's tricky, because this looks pretty short, looks like a short if it was in the right location. But you did get a long signal here, which is, I would have a hard time not selling if I saw it turn off and turn back on again. So it might still need some tweaking. And so the problem, the other thing that we might be able to fix, the other way to fix it is this being at below 0 might not be good enough. It might need to be below like 30. Let me see, what is it here? 20, yeah, negative 27. So we might need to bring it down to negative 30, which means we'll miss some of the really like tippy top. Let's try 30. Okay, so this is the one we're fixing is the long Hall MA 86. This one. So for the bull case, not only does it need to be above 0, but I'm thinking it might need to be above, let's say, 30. Okay. This will have 2 of them. Oh, oops. Less than, hold on, did I do this wrong? It has to be below negative 30. Okay. And then we have to do it for these two. Bull needs to be above 86, 30. And again, I don't know if this is going to be good or not. We're going to find out. And then bear 2. It needs to be under negative 30. So not only does it have to be below 0, it has to be like well below 0, negative 30, on the way down. Now, let's see. Oh, although here, it already said it had to be below negative 70. So why do I have this twice? I don't actually think I need this twice. Do I have something wrong here? 86 is below negative 30. This is below 0.5. So I think this is actually wrong. I might have to adjust this a little bit. I don't actually need both of these because it's saying 86 SG1 is not only below negative 30 but also below negative 70 when this one. So I could put this as yeah, I could just take that out. It's not going to matter. If it's below negative 30, it's below negative 72. But, okay, so let's just see what that looks like. Does it look any different? Okay, so that's fine. No like back and forth. What we don't want to see is like a huge missed opportunity or like green, red, green, red, green, red. So this is clearly bearish. Clearly bearish. And yeah, see, I'd rather see nothing here, personally. So only one time does it reach that condition, because this is falling, right? So it looks like it could go lower if it's bearish enough. The purple is rising. Yeah, that did fix this up quite a bit. But I could say that the purple has to be falling too. Like the purple starts not falling, right? The purple bars here stop falling right there. See how they're falling, falling, falling. They're not falling here. And see, that might get you out of the trade a little faster too. Let me try that. The purple bars are the ID70, I believe. So let's try ID70. Needs to be greater than it was one bar before. Whoops, wrong button. Okay, that does take out quite a bit. And I actually kind of like that. Okay, and then this one. 70 needs to be lower than ID70, right? Needs to be falling compared to the previous bar. Yeah, there we go. Okay. That should help. Again, I won't have as many signals, but sometimes that's a really good thing. often that's a really good thing. Because like down here, you'd know to get out. See that? Well, I guess there it doesn't really matter. It comes back. But there you'd know to get out too. Nice. Look out. No more red here. I like that a lot. Okay, so you did get one right here, right? Where you might have to fade. Because it goes sideways for a bit. And then, but by the time it gets, I mean, all the price action says it's looking bullish here, and now it confirms it right here. But there's no, this is your buy signal way at the bottom. And the way that my coach has taught me is that you catch this one and you don't have to worry about it. These are much harder trades to take than this one. It's hard to find this trade, but if you know how to find it, it's a much easier trade to execute than it is way up here. So see, this is saying stay bullish. See how there's no red background for a long time? Because this is all bullish. So it's doing, and even this, like, yeah, it gives me a red line here and here, right? And so it's like, you could scalp this, but it's probably only going to come back a little bit. So I might end up missing that, but this one is a little easier to take, I think. I mean, this one I might get stuck in because it's not green there, but it's basically, it stopped turning green and immediately signaled short. So yeah, that's kind of cool. Now that's kind of unfortunate that it like bounces back, right? That sort of sucks. But I mean, you'd know at this point, when you get the sell signal right there, you'd know there that you're looking for sells. Wow, they fake you out there, so they buy and then immediately trap a seller. What happened there? Why is this triggering? 35. So I could go further. Is that what happened here too? 33. Okay, let's do 35. I think I'd prefer less signals than more. Let's do 35. 86 was it? I can't remember. This is why I wrote it down. 86. 35. Apply. Whoops. What'd I do? Syntax error. Bear 2. Hold on a second. It was just working a second ago. Didn't I just change that? What did I change? Here, cancel. Can I cancel it? No. Okay. What did I do? Bull and Bear RC2 are not working. What did I do? I thought it was working before. Was it? Do I like it because it stopped working? Is that the problem? Maybe I have a mistake in here that I didn't see before. Hold on a second. Okay. So I think there is a mistake in here somewhere. I think that was it. I must have accidentally thrown an extra. Nope, that's not it. Back to this again. Okay, so this should have another one because it's the entire OR signal statement. This one has one. This one has one. Oh, right here. There's an extra little stupid thing. There we go. See, this is the problem with debugging, is like it's the stupid shit that you mistype. There's just like an extra little bracket. This one's missing one of these. Nope. Bowl R2. Yeah, this one is wrong. There is something not right here. Okay, this one. Oh. 81 needs to be greater than negative 0.5. That was wrong. That's not the problem, though. This one's correct. Right? Am I right about that? I think I did that wrong on the other one. Yeah. Greater than, yeah. ID70's rising. Oh, I see it. .sg1. Okay, so now there's probably just a parentheses missing, because I think I was messing with that before. There we go. Okay. Stressful shit. Need a smoke after all this. All right, so let's see how that looks. I'm just gonna save this. Ooh, this has been a long one, you guys. I'm sure no one's been here the whole time, but hopefully anybody who's coming in and checking it out is learning something. Okay, so now we've got consolidation down here, a buy signal, and a hold signal, right? And so when we get these bear signals, this is what I wanted to happen, is when we get the bear signals during the green background, we don't fire. We can take this one, this bowl, because the red is stopped, right? But these you don't take, is what I'm hoping. Yeah, now here's the problem, is that you're gonna miss the edges, right? Because you're gonna miss some of these. But this one you're in time for. So that's the hard part, is like you have to use, like, if you're gonna fight these, if you're gonna fade, it's oh, that sucks that that's still 35.3. Wait, what is it up there? Is that the same reason why I'm getting it up here too? No, I'm getting up there because it's so high. It's at 78. It is dropping though. So maybe 75 isn't high enough. It might need to be higher than 75 for me to hold. Let me see if that keeps happening, because this sucks, but it's just a matter of picking a number, you know. I mean, you could do 36 if you want. Like, it was dropping at the time and it just went too far. What's happening here? 48, 40. But this is way up here at 80. I thought that wasn't supposed to happen when it's that high. Oh no, it is supposed to be red when it's up there. Yeah, so you'd have to have it pretty high to keep that from happening. I'll have to double check that. Okay, so this says don't short. That's fine. And then these are definitely don't long. Now, yeah, like this one sucks. What happened here? Angle's negative 77. Yeah, they're all really low. And then you've got this guy way up here. So that's the problem, is that this is so high. So usually you need to consolidate first, and then you just need to know to pick it up there. Tricky. They're tricky. So it's not so much that you can't do it, it's just you can't expect it to go very far. Like this, right? Like, it's technically a buy signal, but that buy isn't going to go very far because it's turned bearish already. And like this, buy signal, but this is like running out of gas. So most likely it'll pull back. Yep. And so all of these buy signals aren't gonna produce much until the red turns off, which is here. Now it can go somewhere. It doesn't really go anywhere, but that's beside the point. This is still bearish. Okay, here's where bearish stops. You can take that, bullish. That's a nice short though, because that can go either way. Once again, no signs of any bullish development. See that? So we really shouldn't be getting super bullish here until, like, it's too bad that I can't filter this out, because I like these little scalps. I'd have to know that it's just doing that because this is so overbought, right? And so it's usually not just going to go straight up. It's going to come back, but that backtrack might not go very far. So that part of the code is the part I don't like. The fact that these are so close together might, like that this is so high and this is so low. It might actually not be that much of a problem to long that, as long as the orange has room. So that lower indicator, that lower blue indicator here, can recover like as we continue higher. See that? That's all we need is that one down bar. And it just keeps going. See, but eventually it's going to pull back, right? You don't want to buy this, but it looks like buying this is actually okay. It's just weird because this is a divergent high. See that? It's like an even or low high, and then this is a higher high. So you'd think that that divergence would produce some kind of a pullback. Oh, I see. It just happens later. Okay. This is the second time I've seen this where you get like the triangle bar that's green, and then the next one is a bear signal that doesn't have green. That seems to be good. Interesting. Like I said, I don't know if I'm actually going to use this. It's a good example of how to take an idea, build it through process of elimination and trial and error. Especially when you don't know how to code. But like, see how like I'm getting all these signals firing and they're not going anywhere? Well, that's kind of helpful because I know here that I don't really have any bias, right? Until here. I mean, I can look here and see that it's kind of short. It's coming lower, right? Like you can just look at it. But if you wanted to be able to just, I'd like to be able to remove these and code enough of it in there that I don't even have to look, right? And one way to do that would be to, like, you might take this short because the green just turned off, so you'd think it's short, which is fine. I actually kind of like shorting that, personally. But to do that, I would have to know. See, once again, this is so far down that I was thinking that it means it's not bearish. But this is clearly turning down. So that part of the equation might be wrong. This blue getting overbought or oversold might not be that big of a deal, because it can keep, first of all, it can keep going, right? Does not make it bullish, and it looks like as long as this is far enough away, it's okay. That seems to be the biggest point of contention, is that if I was using this strictly, I'd be missing quite a few trades. Whoops. Open, close tab. Okay. Wow, they're tanking it. Sorry, I just looked at my chart. I'm like, oh fuck, they're destroying it in Asia. Okay, so like this one's good, you know, this one's nice, and that's the exact same situation. No, it's not. Why didn't this trigger me? This is that same situation. So does it go? Yeah, that's a good move. Okay, so why did this not turn red? But this one, well, this I kind of, this one almost should be red, but like this one. So it's, let me see, what did I say about that one? So that line is the fast acceleration line. I don't even think we messed with that one. We just talked about it, but I don't think There's no ID83 in there, right? Let me double check. Nothing, no mention of ID83 in either of these. ID83. 86, 81, 87, 70. Okay, no. So that's not what it is. I thought that's what it was, but it's not. So why is this bullish? Oh, it's because the orange bars and orange area are both above the 30 line. And we have the Hull MA falling. Right? Yeah. Okay, so I'll have to. And then 70 is the purple bars are above 0. So hold on, I think I know how to fix this. I have an idea. So okay, so when the 70 is above, so this is rising, right? And it's saying to be bullish. But in this case, you can see that this is 9 and this is 8. So it's rising, but it's not like, it's not, what am I trying to say? It's like still inside that neutral zone. And then but it's got such a lag because it's such a long length that it's a bar late. So instead, I think what I'm going to use is this green line. We're going to try that. So rather than 70, right, we're going to switch it to the derivative, which is 59. Okay, let's see if that fixes it. Okay, so rather than 70, which is a good idea, we're going to switch this to 59 and say that 59 needs to be rising, and that should fix that. Yeah, it'll give me, it'll take a, it's not going to fix, it's going to put that those like brief breaks back in there a lot of the time, but let's see if it maybe makes it a little bit, because otherwise I'm going to miss a lot of trades if I ever try to use this. So let's do this. So clearly, I actually bought this. I remember this trade. So it would keep me from selling this. That's good. This one, I mean, I'd probably still get my risk off. And then this one, I like for the short. So that's great. And then look at that. Stops right there. And there's a buy signal in it. Okay, so this is interesting because like this is not something I would buy, and it turns green, and then it immediately turns off. And I think that might be actually a sell signal. Because the derivative doesn't drop, right? And the angle's above 75, just barely, and then it comes right back down again. So if we would change that angle to like 79, it wouldn't be green there, but then also like we wouldn't be holding it all the way to the top. So I'll leave it for now. But the like turning on at the top of the channel and then turning right back off again might actually be a good short. Like this, turning on red and then turning off. This is probably a long. So I'll leave it. So we didn't catch this one still. Why not? This is above 0. This is above 0. This is falling. Again, it's because the angle is so high. So the only way to get out of that is to change that from 75 to like 79. And like I said, the problem is then you won't necessarily be bullish here. It wouldn't even turn green until here. Right? And see, this is 78, 76. You wouldn't even be green there. That doesn't really make sense. Okay. So that maybe So here's another one where it dips and then comes right back up again, and like you know that should be a short soon. And like that's the short, or else mark this pivot and short this, or this. Okay, so now we fixed it. This was a problem earlier. I marked it because it was identifying a spot that I didn't know would be a turn, and now, oh, actually no, it's because it looks like, so this is a pivot. We get under the pivot, come back to the pivot, it rejects. That's perfect. And we know we're looking short there. Okay, just brief break, that's fine. Look at that. That's nice. Oh, this is right now. Cool. Okay, so I'm gonna adjust these colors just a little bit, because I think I'm gonna leave this on my chart for a bit. So I'm gonna make this like 80. I'm gonna put these at 80. And I could separate them, make one like brighter than the other one if I am trying to determine if I need them both, or if they have like different meanings, right? Like you could, like if that one's 80 and that one's 75, you'd see the difference, you know? Like subtly, you'd be able to see like the gradient changing. Oh, I gotta change this here. So, no, that's not it. Background. There's not a transparent background. No. Transparent bar. Fill to 0. Fill to top, fill to bottom. Okay. So is the transparency not a thing in the background? I guess not. Okay, so in that case, what I'm gonna need to do, oh, or am I just using the wrong one? No. If I make this 90, nothing happens? Interesting. Okay, so I'm gonna go red. Oops, I didn't save it. Shit. Okay, so here, here, here. Add to custom colors. Okay, apply. Yeah, that's not that much better. I thought I could make this transparent. Fill to 0. Oh, can I not pick any of the other ones? No, I can. No, I can't. Okay. Because I picked custom alert bar based on background and not color bar based on alert condition. It doesn't give me a lot of options here. Transparency. Oh. Okay, so then perhaps the answer is to do it like very, very, very subtle. There we go. And then the ball. more subtle than that. Okay, so then pick one of these, go to green, come all the way down, do like that. There we go. So that works. Just change the color to something a little closer to black. And it'll look like it's transparent. There. Okay. That's a little easy to look at. Easier. Okay, so that's the basic idea. And like I said, the other thing I promised to do is to go back to a random day. So let's back up to where these signals start. And in fact, let's do something even more fun. Let's apply it to a different time frame. Okay. We're going to turn off the beeps. And then, is this where they start? No, they go further back. Okay, we're just going to go all the way back to this will be days earlier, right? So I'm just going to see if this is like something unique to today's price action, or if this is something we could expect to work most of the time. And again, like, it's not enough sampling to like just, yeah, like, okay, that's good. So Friday the 26th, right? So a week and a half ago. So here clearly we were bearish. That's good, right? All that's good. Notice when it goes sideways, it turns off. So it's not necessarily bullish when it turns off, but when it sets up, bullish. And like this one, you knew not to buy. That's kind of nice. And it sets up again in the same area and you take it. Bullish, bullish. That's good. Okay, look, this guy was bearish, and then we got immediately above him, so that should be bullish. And again, what's happening here? It's at negative 49 and negative 81, so these are so low. Yeah, it just dipped a little bit further than the 35 that we told it to watch for, and then once it comes back to here, oh, it's actually this line. It's getting flatlined. Yeah, interesting. So I'll have to watch for that. Okay, it's bearish. Yeah, that's not ideal. Same thing, 50. So we might have to adjust those numbers based on the time frame. See, these are hitting kind of late. And I bet this is good, but I bet the reason is because the time frame's higher, and so this range is just going to be a lot wider. Like that's good though. Red, stop. Then buy orders still work. Don't sell this. Buy order. Hold. Nice. Look at that. Sell order. This guy gets trapped. It's not a buy, right? But it's considered bullish. And then here, like, it would be great if this was a sell. 50. See, so the problem here is that it's easier to get to the edges here on this time frame. So what I'd probably need to do to apply this to other time frames is to actually adjust it to every time frame. Because see, this shouldn't be happening. So when it's like balanced, it's going to show me, like, it'll work when it's bullish or bearish, but when it's balanced, it's going to turn green at the edges and turn red at the edges, and that would probably fuck me up. So I'd have to, like I said, I'm not going to do it now, but I would have to adjust this. See, like this. See, it starts to get balanced, and then like this guy gets trapped, and that's a short, and this side is a short. You know, like that's hard to tell. This short, right? And it's all because the levels here are higher on this time frame. Fascinating. So it really, and that's why you backtest. So that's good to know. If I wanted to apply this to a higher time frame, I would have to. Oh yeah, but like this works. Once it, like the momentum, it finds momentum really well. It just can't handle the balance unless you adjust to the current time frame, and that does make sense because the oscillations are based on how many bars are being produced, and you're not going to get as many bars in the higher time frame. You know, because it's harder. It takes more price movement to print a bar. So you're going to end up getting these stuck on the edges a lot easier. Like, look at this. See this? Like, that's a problem. Unless you just like adjust and know that that's a cell because you recognize it's balanced and it was green, now it's not. But like, I would love for this to be not red, you know. Wow, just missed it by 1 point. So it would need some adjusting to work on the higher time frames, and I'm okay with that. But yeah, look at how nicely it keeps you from buying all this though. That's great. Okay, cool. So yeah, hopefully this has been at least entertaining, if not educational. I'll put that back. Gonna turn off the dings, and there we go. All right, I'm gonna go get something to eat and maybe backtest some of this a little bit more. Like I said, I don't think this is like a perfect system or anything, but I do think it will probably help me not, like, I might still make the mistake of like buying this, right? But at least I won't be buying this. And I'll just have to remember that just because it's not red anymore doesn't mean it's bullish. Just because it's not green anymore doesn't, like right here, this looks like a decent buy, right? Because it's not red anymore and I got the buy signal. But if it wasn't for the actual buy signal, I can't just go ahead and buy it. But that was actually a legit buy signal there. So and that lines up. Very cool.